Okay, good morning, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagur here. Now, before I start the discussion, if there is no issue with the sound, please do let me know. Either give me a thumbs up, let me know. Either write YES, alphabet ES, anything is okay. Done. Let's start. So, yesterday, what we have started? We have started with the concept of taxation. Okay, we continued, right? We started with the concept of taxation and we discussed many more concepts under taxation. What we have discussed yesterday, right? What was the point of discussion yesterday? We basically covered, right, different types of taxation system day for yesterday. After that, we discussed the corporate taxes, income taxes in India. Why has the government of India reduced corporate taxes from 30% to 22%? What was the objective, right? And please understand, very recently there were certain studies done whether this reduction in the corporate taxes has actually helped Indian economy or not. Very recently studies were done, and I told you, in fact, the studies show that annually the government of India is losing the tax revenue of more than 1 lakh crore rupees because of the decision to reduce or cut the corporate tax rate from 30% to 22%. After that, we have discussed concept of capital gains tax. That is, you simply purchase an asset, hold on to the asset, right? That is, keep the ownership of asset for a certain time period, and then sell it in the market after certain time period, right? So you will basically you'll basically be earning certain capital gains. On the capital gains, the government will impose and collect taxes. Such a tax is called as capital gains tax. So the capital gains tax can be short term, long term, and I've told you whether it is short term or long term, it will basically depend from one asset to another asset. Traditionally, historically, it was 3 years, but later the holding period has been changed. For some of the asset, holding period is 3, for some it is 2, for some it is 1 now, right? So that is a concept of capital gains tax. After that, we have discussed idea for tax avoidance. Tax avoidance, what is the idea for tax avoidance? You are using certain procedures or you are involved in certain actions, as a result of which your tax liability will come down, and none of the actions that you have taken or performed are illegal in nature. None of them are illegal. These are not preferred, but these are not illegal in nature. On the other side, if I say tax evasion, these are certain actions which are undertaken by the taxpayer to reduce the tax liability, but those actions are illegal in nature. In the context of tax avoidance, how it can be done, right? What are the issues related to that? What is a base erosion and profit shifting, right? What is BPS action plan? What is GAR? What is minimum alternate tax, etc., etc.? All of these concepts we have discussed yesterday. Then we entered into the idea of GST, goods and services tax. Right? GST, goods and services tax. Now, what are the important points to understand GST? Before GST was implemented, we had, to begin with, at the central government level, there were different indirect taxes, such as service tax, such as excise, etc. So, central government would impose certain indirect taxes on production, and whenever the goods were sold in the market, state government would impose sales tax. State government would impose sales tax. And later we realized that there is a lot of cascading effect. Cascading effect simply means a tax imposed on existing tax. A tax which is imposed on existing tax. So there was a lot of cascading effect. To address cascade effect, what we did was the state governments came together and they decided, instead of having a sales tax, we will replace the idea of a sales tax with concept of value added taxation. VAT, value added taxation. Under value added taxation, the objective was to provide the input to tax credit at every step whenever the sales tax or VAT was paid, in order to address the issue of cascading effect. Now, even after implementation of the value added taxation, whenever there was basically the interstate trade and commerce, whenever there was interstate trade and commerce, it actually led to cascading effect, right? Because interstate trade and commerce, the central government has central sales tax, It is imposed and collected by the state government where the production has actually happened. So that actually led to cascading effect. And now, because of all of this, the central government decided that we will replace all these indirect taxes with only one taxation, that is a goods and services tax. GST, goods and services tax. Under GST, what are the features? I'm starting with the features now. What are the features of GST? Point number one, it is going to subsume all the indirect taxes. GST is going to subsume. Subsume means we are going to take out all these indirect taxes and bring them under GST only. As a result of this, we will have one nation, one indirect tax, and one national market. Right? So one nation, one indirect tax, only one GST, and one national market, which means irrespective of whether the good is sold in state X, Y, Z, A, B, C, the GST rate shall remain same. GST rate shall simply remain same. Point number two, in order to implement GST, we wanted to make amendment in the Constitution of India. And the reason being, we are taking the powers of central government as well as the state government and we are bringing them under only one taxation. So we amended the Constitution of India and hence, right, there is a provision in the Constitution of India now to implement GST. Third point, we have a dual GST structure. Dual GST structure. Dual GST structure simply means the GST will be broken down into two components, CGST and SGST. CGST anyways will go to the central government and SGST will go to the state where the good is actually consumed, where the consumption of the product actually happens. That is a precise reason I said GST is a destination based tax or consumption based tax. Next point, the President of India. The President of India under Article 279A has established a constitutional authority, GST Council. The GST Council has a composition representation from the center as well as the state. The chairperson is the finance minister, and the revenue ministers of all the state governments plus the union territories which have legislative assemblies, there is a representation in the GST Council. Whenever the GST Council has to take a decision, we need at least a 75% majority present and voting. So at least 75% majority. And apart from that, the voting distribution is 1/3 of the votes have been given to the central government, that is the union finance minister, and remaining 2/3 of the votes have been equally divided amongst the states. Next, after that, GST Council, we have discussed the idea of a compensation. What was the need for a compensation? When we wanted to implement GST, there was a concern raised by many state governments saying that if I give away my taxation power, I don't have any independent power to vary the tax rate. I'm concerned about my tax revenues. In order to basically convey them or convince them of the benefit of GST, government said, for the first 5 years, since the implementation for the first 5 years, I will give you 100% revenue loss in the form of a compensation. Any revenue loss, 100% of it will be paid in the form of compensation. That is the reason we implemented idea of a compensation. Now, we were supposed to start the discussion from this particular slide. Let's start now. In GST, we have different rates under GST. We have 0%, we have 5%, we have 12%, we have 18%, we have 28%. Now, what was the need? Why do we have multiple rates of GST? Why not a single rate of GST? Why not, let's say, all the goods and services under GST will be taxed at 12%? Why not that? Why not all the goods and services being taxed at 20%? Why do we not have single rate? Instead, why are we having different rates? I'm using the term rates, right? They are also referred to as tiers, multiple tiers of rates under GST, or they will also use the term GST slabs. GST rate, GST tier, or GST slabs, right? 0%, 5%, 12%, and 28%. Apart from that, we also have 1%, we have 5%, etc. Why are we having multiple slabs like this? Let me give a critical evaluation, right? Please understand this carefully. Let me give a critical evaluation. What was the need for it? What is the issue? What is the disadvantage of it? Let me start with what was the need for having multiple rates of GST. Point number one, imagine all the goods and services under GST will be taxed at, let's say 18%. Please tell me, if all the goods and services are taxed at 18%, can this become inflationary? Start participating now. Revision is over. We are starting discussion. If all the goods and services in India which are there under GST, if we tax them at 18%, will that not contribute to inflation in the economy? Don't you think large number of goods and services, the market price will jump, it will increase. And when the market price will increase, automatically it will contribute to inflation. So if you have a rate, higher rate, it will cause inflation. But if you have lower rate, let's say on the other side, some of you will say, in that case, sir, let's tax 5%. All the goods and services, let's tax it at 5% under GST. Now, please tell me, a poor person will purchase a good, right? Let's say Hawaii chappal in the market. A rich person will purchase a Mercedes Benz car in the market. Do you think it is fair to impose a GST rate of 5% on both of these goods? Think logically. A poor person will purchase Hawaii chappal and a rich person will purchase a Benz car, and you are proposing 5% GST on both of them. Is it fair? Of course, no, it is not fair. Rich people or people who are consuming costlier goods, right? Let's say luxury goods, they should be asked to pay higher rate of taxation. So having single rate will be unfair for the poor people. So that is the reason, right? We say no, not even 5%, not even 2%, not even 6% on all the goods and services. Moreover, please think of it. If I impose a lower rate of GST, single rate, a lower rate of GST, don't you think that will affect how much revenue can be collected by the government? How much money can be collected by the government in the form of GST? Automatically, it will affect it. It will reduce the amount of revenue. So that was also a concern. So understand the logic here. First one, right? There are different consumer groups in India. There are different consumer groups and their consumption patterns are different. Rich people will consume luxury goods. Poor people will consume more of necessities. So you should not have a single rate of GST. You should have a different rate of GST. So that you can simply say, those goods which are majorly consumed by the poor people, we will not implement a higher taxes on them. But those which will be consumed, which are called as luxury goods, we will impose a higher tax rate on them. So there are too many groups. Hence, we want to have different rates of taxation. Having higher rate of taxation might lead to inflation. Having very low rate of taxation might be affecting revenue neutrality. Now, what is this term revenue neutrality? Before GST, before 1st July 2017, you had different indirect taxes and you earned a certain amount of tax revenues. After you shift to GST, after you migrate to GST, whatever tax rate you have, your tax revenues should not fall down. Is the logic okay? Revenue neutrality means before GST you are earning certain amount of revenue. Now you have shifted to GST. After you shift to GST, the amount of tax revenue that you collect should not come down, should not be lower compared to pre-GST. So to maintain revenue neutrality means at least you should be earning same amount of revenue under GST. So to maintain revenue neutrality also, we were forced to have multiple rates. It may also become more and more regressive in nature. That is, let's say all the goods and services under GST will be taxed at 18%. Now, please tell me, if all the goods and services under GST, if they are taxed at 18%, don't you think the burden of taxation on poor people will be very, very high? The tax structure might become regressive in nature. As it is, we always say indirect taxes are regressive in nature. Now, if you tax all the goods and services at 18%, right? So for essentials also, for necessities also, the burden of taxation on poor people will be very high. It will become much more regressive in nature. That is the precise reason why Government of India has decided we will have 0, we will have 5, we will have 12, we will have 18%, we will have 28% GST rate. Multiple rates of GST. But now, if there are multiple rates of GST, what is the problem? What is the issue if you have multiple rates of GST? Let's have multiple rates. Following are the issues. First one, if you remember the central theme of GST, what was the central theme? One nation, one indirect tax, and one national market. Now, please tell me, if you cover, let's say, 1,000 goods and services under GST, and all these 1,000 goods and services are covered under 0%, 5%, 12%, 18%, are we going to achieve the central theme of GST? Will it help us in achieving the central theme? Central theme is one nation, one indirect tax. Name is one, right? We have only one name, but imagine there are different rates of GST, right? So we'll not be able to achieve the central theme of GST. It will defeat the purpose of central theme. That is the first point. Second point, administration is also very, very difficult. When you have multiple rates of GST, administration is very difficult. I'll give you one example, right? Don't remember this, not needed for UPSC, but just to make you understand. Imagine you are purchasing four raw materials. You're purchasing four raw materials, and then you will manufacture a good, you will sell it in the market. Now, if these four raw materials are falling under 0%, 5%, 12%, and 18% GST rate, don't you think there'll be a lot of issues regarding classification of these whenever you will file the GST documents with the government? I'll repeat it just to make you understand again. I'll repeat it. Listen carefully. You're purchasing four raw materials, and each of these four raw materials are falling under 0%, 5%, 12%, and 18%. Now you're supposed to file documents with the government saying that you have purchased, you have paid so much amount of input taxes, you're supposed to claim input tax credit. So don't you think there'll be a lot of complications whenever you're filing these documents? You need to classify, you need to find out under what rate the raw material is falling, you need to submit documents. Then there might be issue regarding classification of the finished good also, under what rate it will fall, etc., etc. Instead of all of this, what if there was only one rate of GST? Whether you purchase 5 raw materials, 4 raw materials, 10 raw materials, doesn't matter, only one rate of GST. Don't you think that would be much more better? It will promote ease of doing business in a much better way compared to having multiple rates of GST. That is another concern. In fact, I'll give you one more example here. Early morning, all of you have eaten a delicacy, sweet delicacy, barfi. Let me know. All of you eaten the sweet delicacy, barfi. When we implemented GST, there was an issue regarding taxation of barfi. GST rate of barfi, there was an issue regarding it. What was the issue? The GST Council, right, had decided if there is a plain barfi means just white color, right, just white color, sweet like this, GST rate applicable will be different. If barfi is there, on that there is a chocolate layering, GST rate applicable will be different. If barfi is there and a dry fruit is attached to the barfi, on the top of it, there's a dry fruit sitting on it, the GST rate applicable will be different. If barfi is there and there is a silver foiling, right, let's say foil on this particular barfi, GST rate applicable will be different. So I hope you understand to what extent complexity will be created because of multiple rates of GST, right? In fact, I hope you understand. In fact, have a look at this. I'll give you one more example. This is more technical. There's a concept called as inverted duty structure. There is a concept called as inverted duty structure. Now listen to me very carefully. Please listen to me carefully. Inverted duty structure simply means you will purchase raw material to manufacture the bottle and you will sell the product. Listen to me carefully. Slightly technical. In fact, it was there in the newspaper very, very recently. I'll give you that article tomorrow. Right? You will purchase raw material to manufacture the bottle, sell the bottle. So now, whenever you purchase raw material, the GST is applicable, or tax is applicable. Whenever you sell the bottle, the tax rate is applicable. Generally, normally what you will see is on the input, tax rate is, I'll take a simple number just to make you understand. On the input tax rate, if it is a 10%, on the output, the tax rate will be higher, generally higher than 10%, let's say 15%. Is the logic okay? Is the logic okay? Right? Generally what happens is, normally what happens is, on the input, whatever the tax rate is there, on the output, tax rate will be bigger than the input. And it makes perfect sense also. It makes perfect sense. If you if you looked at the earlier example, right, whatever was the tax on input, tax on output was at least that or more than that. It makes perfect sense, right? But in inverted duty structure, what generally happens is, whatever tax is there on the input, it will be lower than the tax that is imposed on the output. Whatever is the tax imposed on the input, it will be right, greater than the tax that is imposed on the output. Now let me ask you a very simple question. Think logically and tell me, if you are a manufacturer, you're manufacturing this bottle, please look at the example and tell me, does it make more sense for you to import the bottle or import raw material? Please look at it and do let me know. Right? You're manufacturing, right? You're a manufacturer. Okay. So you're manufacturing this bottle. Does it make better sense for you? It makes more sense for you to import raw material or import the bottle directly. Arre Baba, you people are very dangerous. My dear, if you import the raw material, you will pay 15% tax. Please think logically. If you import raw material, you'll pay 15% tax. But if you import the bottle itself, you'll pay only 10% tax. I'll connect it to GST. Don't worry, I'll connect it to GST also. Just give me a minute. Now, please tell me, if you import raw material, you pay 15%, and if you import the bottle, you'll pay 10%. As a manufacturer, would you prefer to import raw material or a bottle? You will prefer to import a bottle only. Correct? Yes or no? Anybody has an issue? Right? If you say, sir, how? Why? It should not be like this. My dear, if you import raw material, you're paying a higher tax rate. You're paying a higher tax rate. And because you're paying higher tax rate, don't you think the cost of the bottle, once you manufacture, by importing raw material, the cost of the bottle will become higher? Rather than that, import bottle only. And tax rate is applicable is 10%. So please tell me, I will connect it to GST in some time. Just give me a minute. Please tell me, traditionally, not just GST, traditionally, can I say having inverted duty structure is a problem? And if you even think now, sir, why this will become a problem? Now I'll import bottle. Why is it a problem? Is Government of India promoting Make in India? Correct? Is Government of India promoting Make in India? And if you want to promote Make in India, it simply means you are promoting manufacturing activity in India. But this, right, basically this situation, inverted duty structure, will not lead to promotion of manufacturing. It might lead to more and more imports into India. Can you see the problem with this? Is the logic okay? Everybody is able to understand this. Very recently, this was there in the discussion. That's the reason I'm talking about all of this. This will not promote manufacturing in India. It will rather promote directly importing finished goods in India. So that is generally the problem with inverted duty structure. Now, come to the connection to GST. What is the problem of inverted duty structure in GST? Let's say hypothetically, I'll take this example, listen carefully. Let's say hypothetically, you are purchasing plastic, point number one. You're purchasing plastic to manufacture, right, this bottle. Certain plastic is generally used in manufacturing of bottle. So now can I say, Plastic can be used in manufacturing of a bottle as well as in manufacturing of a car. Please think. Plastic has a dual use, multiple use. It can be used in manufacturing of car also. In car also, certain parts are made using plastic only. And it can be used to manufacture bottle also. Let's say hypothetically, plastic has a 12% GST rate. The car attracts 18% GST rate and bottle attracts a 5% GST rate. The bottle attracts 5% GST rate, plastic attracts 12% GST rate, and car attracts 18%. Now, please tell me, looking at this, is it a inverted duty structure or not? Looking at this, is it a inverted duty structure? Of course, yes. Raw material is attracting a higher rate compared to a finished product. Now, what is the problem with that? Under GST. Under GST, what is the problem? Imagine I'm a manufacturer, right? I'm a very small manufacturer, very small manufacturer. I don't have sufficient amount of money. Generally, I keep on borrowing from the market to take care of my manufacturing, to pay salaries of the employees, etc. In that situation, please tell me, having inverted duty structure, as a result of which I will pay 12% GST to the government in step 1. Don't you think that's a problem for me? Instead of 12%, I will get it back. Many of you will say, but sir, you will get ITC. But please, now I'll go to the second point here itself. Instead of 12%, if the government had a GST rate of 5%, don't you think if I purchase raw material of 100 rupee, in one case I would be paying 12 rupees to the government, waiting for the government to give it back. In another case, I would be paying 5 rupees, waiting for government to give back 5 rupees. In a situation where the manufacturers do not have sufficient amount of money, where they are forced to borrow from the market to take care of the, let's say, salaries, working capital requirements, etc., what would you prefer? Paying 12 rupees to government of India, waiting for the government to pay it back, or paying 5 rupees to the government and waiting for 5 rupees to be paid back? All of you will agree this is better. Are some of you saying 12 rupees? Why are you missing the point? Don't say, sir, I will get back 12 rupee, more money. No, you're paying 12, you will get 12. The government is not doing any charity. On the other side, you're paying 5, you will get 5. But the point here is, you do not have sufficient amount of money already. You do not have sufficient amount of money. You are already struggling. And generally, that is the situation. That's the situation. Right? You do not have sufficient money. So would you want government to collect 12 and pay it back, let's say, after 15 days? Or would you want government to collect 5 and pay it back after 15 days? Don't you think in second case, less of your money? At least now it should be clear. In the second case, less of your money government will take in the form of GST and pay it back. Which means compared to 12 rupee, when you pay 5 rupee, less amount is stuck up and you will get it back. Right? So can I simply say, having inverted duty structure can impose working capital pressures on companies? I'll put the statement again. Listen carefully and let me know. And by the way, those who are asking, sir, what do you mean by working capital? Working capital is the amount that is spent by the companies on day-to-day expenditures. Working capital is the amount that is spent by the companies for day-to-day expenses. Let me give you certain instances and let me ask you whether you're able to understand or not. Tell me, if the company will spend money on purchasing machine, can I call it as a working capital expense? I'll repeat the statement. If the company will spend money in purchasing a machine, can we call it as a working capital expense? No. Some of you are saying yes. No, my dear. Why? Why machine is not a working capital expense? Do you think companies will spend money on purchasing machines on a day-to-day basis? On weekly basis? No. Right? It's capital. Machine is a capital. No doubt. Machine is a capital. Nobody is denying that. But it is a type of capital right, to be precise, it is investment capital. It is going to be spent, or the company is going to be spending money on machines on a periodical basis, right? On periodical basis, not everyday basis, not on weekly basis. So it's an investment capital. It is not a working capital expense. On the other side, tell me, purchasing raw materials. Please tell me, purchasing raw materials, right? Can I say expenses on raw materials generally is a working capital expense? What about salaries paid to the employees? Working capital expense. So whenever they will spend money on asset creation, investment will always lead to creation of asset. So whenever they spend money on creation of an asset, right, investment capital, that is the example of a machine. On the other side, electricity bill, right, the salaries that are paid, raw material that is purchased, this is called as working capital. So the point I'm trying to make is, having higher inverted duty structure, will put lot of pressure on the working capital of companies, will put a pressure on working capital of the companies, right? So that is the precise reason inverted duty structure is present even today. And those who are going to ask me, sir, why is it present? Don't you think it is very difficult all the time to find out whether the good will have a single usage or multiple usage? Done? All of you okay? Right? Whether to have this particular product which will have a single usage or multiple usage, it's very difficult. It's very difficult to find out. And because we assume that plastic is being used in a car, we have 18% GST on a car and 12% GST on plastic. We assume that, okay, right? Car will attract 18, plastic will attract 12%, no problem. But plastic can be used in other products also, where the GST rate could be as low as 5%. That will inadvertently lead to inverted duty structure. Okay. And so that is basically the argument. And that is basically the argument issue of having multiple tiers. And second one, I've already told you, we want one nation, one indirect tax, but having multiple tiers, multiple rates under GST, right? It is not going to help us in achieving, right? It's not going to help us in achieving the central theme of GST. Now, what should be done? What should be done? There is something called as rationalization. Even Government of India is discussing this now. There is a process called as rationalization. What do you mean by rationalization? We are going to take these GST slabs, reduce the number of GST slabs. Rationalization simply means change the structure, make it much more easier. What was the rationalization proposal earlier? Rationalization proposal earlier that was put forward was, we will take 12% and 18%, we will merge this to 15%. Right? CSAT wise, you will be very happy with this. You will take 12% and 18%, and right, we will merge this in between 15%. So most of you will think this is very rational. So 3% extra here, 3% lesser here. We are not losing, we are not gaining. It should be done. It is very rational to have one rate by merging two rates like this. But there is a problem. There is a problem. What is the problem here? The problem is that imagine the value of goods and services which were taxed at a 12% is 100 crore rupees. Value of goods and services which attracted a tax of 12% were worth 100 crore rupees, and value of goods and services which attracted 18% were 500 crore rupees. 500 crore. So 100 crore plus 500 crore, you will get basically, you will get 600 crore rupee, right? 600 crore rupee worth of goods and services. Let's do the CSAT now. Let's do the CSAT. 12% value of goods and services sold is 100 crore rupees. So can I say the government will be earning 12 crore rupee here and 90 crore rupee here? Before the merger, government will be earning 12 crore rupee here and 90 crore rupee here, which means the government revenues will be 102 crore rupees. But now what we have proposed is 12% and 18% should be merged to have only one rate, 15%. Total value of goods and services will be 600 crore. 15% of 600 crore, what will be the revenue collected by the government now? Government will collect revenue of 90 crore rupees. Now, please look at the picture and tell me, or look at the calculations and tell me, if I simply merge 12 and 18%, can I say there will be revenue loss for the governments? I'll repeat the statement. If I simply merge 12 and 18% and have a single rate 15%, can I say it will lead to revenue loss for the government? Of course, yes. And those of you who are wondering, sir, is it always 90 crore? Is it always 102 crore? I'm giving you a hypothetical example. Hypothetical example, because the fact of the matter is the value of goods and services which attract 18% GST are higher. The value is higher compared to the value of goods and services which attract 12% GST. In fact, various surveys have shown that if government will do this, annually government will lose more than 1 lakh crore rupee. If government will do this, annually government will lose more than 1 lakh crore rupee. That's not a small amount. That's a very, very huge amount. That is the reason government so far has not undertaken this, has not done this. But what is the way forward then? Should we keep like this only? Should we have multiple rates under GST? No, that is not way forward. What can be done? I'll give you a recommendation. Please remember, if UPSC will ask you, please write the recommendation. Under the Ministry of Finance, there is one authority, there is one institution, public institution that is working. The name of the institution is NIPFP. NIPFP, National Institution for Public Finance and Policy. I'll repeat it. Under the Ministry of Finance, there is one institution which is working, National Institute for Public Finance and Policy, NIPFP. What NIPFP has recommended is we should merge it. We should merge it. We should merge 12 and 18% and have 15% GST. So that the number of rates, number of slabs under GST will come down, rather than having 0, 5, 12 and 18. Now we will have 0, 5, 15 and 28. Right? So instead of having 0, 5, 12, 18 and 28, now we will merge this and we will simply have 0, 5 and 15 and 28. The number of rates under GST will actually come down. But again, concern is the same, revenue. We will lose a revenue. So this is first recommendation, merge 12 and 18. Now there will be a revenue loss. To compensate for revenue loss, what it has recommended is the 5% rate should be increased to 8%. The 5% GST rate that is there should be increased to 8%, and the 28% GST rate should be increased to 30%. The 28% should be increased to 30%. Now, one more concern, although the institute says if you increase 5 to 8 and 28 to 30%, that 1 lakh crore revenue loss you are thinking of, that will be adjusted. You will not be incurring a revenue loss. You will be able to collect the same amount of GST revenues if you increase the rate. But the concern now will be, what if the products on whose the GST will be increased from 5 to 8%, these are the products which are consumed by middle income households. These are consumed by the poor households. So they will be negatively affected now. That is the precise reason this institution has given the recommendation for many months now. But so far, Government of India has not taken any measure or any decision to change the rates of GST. So these are certain things that you can write. You can basically write as a way forward, as a recommendation when you write descriptive answers under GST. Can we go forward now? Can we go forward? Right? So old versus new, etc. We have discussed all of this yesterday. Okay, sir, how can it be way forward? My dear, I told you, no, you need to rationalize a GST. You cannot have you cannot have multiple rates of GST. That is flawed structure. I'll give you one argument. Right? Let me know whether this makes sense or not. There is this criticism of GST. Look at this very carefully now. There is this criticism of GST which says It is like old wine. It is like old wine in a new bottle. The criticism of GST is it is like old wine in a new bottle. Right? Why there's a criticism of this? Let me give you an example. Please look at it and tell me. Earlier, let's say, there was a service tax. Earlier, let's say there was service tax of 12%, and let's say there was a excise duty. There was a excise duty of 5%. I'm just giving you hypothetical example. Rates are hypothetical here. And let's say there was a VAT. There was a VAT of 18%. Now, please tell me, under GST rate, we have 0%, we have 5%, we have 12%, and we have 18%. Just make a comparison between the old taxation structure and the new taxation structure. Can I say it looks like old wine in a new bottle? That is, in simple terms, the naming has changed. The name, right, is different. Taxonomy is different. But even today, we have multiple rates under GST. Nothing has changed. Earlier, right, just to put in a very simple way, earlier, there were different tax rates with different names. Now, we have only one name, but with different tax rates. What has changed? Nothing has changed. It looks like old wine in a new bottle. The cover has been changed, but inside of it, whatever is there inside, it is still the same. Right? So that is a criticism. Right? So that's a criticism regarding GST. So there is no other option. You will have to rationalize GST. You will have to reduce the number of rates under GST, because globally, again, one more point here. India is not the first country in the world to implement GST. Please remember that. You might feel because you are discussing GST very recently, it is there, etc. No, there are more than 150 countries. There are more than 150 countries which have implemented GST. India is late in terms of implementation of GST. It's not new. Many countries have already implemented. So India is not the country with a new model, or let's say novel concept, which is called as GST. Nothing new in that. Many countries have already implemented it. So argument is it's a very old taxation. India has implemented. It's been only around 6+ years in India. So you will have to restructure. You will have to restructure. Many of these countries either have one rate of GST or two rates of GST. Most of these 150 countries either have only one rate under GST or have two rates under GST. India has 0, 5, 12, 18, 28%. And as per various surveys, there are only around 4 to 5 countries around the world which have more than or equal to 4 rates under GST. India is one of them. So argument is simple here. You will have to rationalize GST. You will have to rationalize GST. There is no other option here. You will have to rationalize GST. In fact, I'll give you one more current affairs concept. One more current affairs. Why is that petrol and diesel? If you look at it, why is that petrol and diesel do not have a GST rate even today? Why is that petrol and diesel do not have a GST rate even today? Why? What is the reason? Reason is very simple. If you remember, earlier I've told you on petrol, central government will also impose a tax and state government will also impose a tax. Correct? Do you remember that? The petrol fuel for generally, right? Aviation turbine fuel, right? The diesel, petrol, etc. Central government also has a tax. State government also has a tax. Now, next surprising fact. Surprising fact. If you take the sum total of central government taxes and state government taxes, if you take the sum total of central government taxes plus state government taxes, the taxes account for 50% or more than 50% of market price of fuels. I'll repeat the statement. Just understand the magnanimity. Understand the importance of the statement. If you take the sum total of petrol and central as well as the state government taxes, these taxes account for 50% or more than 50% of market price of the fuels. Now, right, let me see how many of you are good in CSAT. can I say in that case, can we say that the tax rate, currently the tax rate that is applicable on fuels is at least 100%? Let me see how many of you quickly understand it. Right? Currently, the tax rate that is applicable on the fuels is at least 100%. Anybody has a problem? Anybody has a problem? CSAT. It's a simple CSAT concept. If the market price is 100, I'm saying out of that 50 rupee is tax. If the market price is 100, 50 rupee is tax. 50 rupee, which means tax rates, both the center as well as states put together, it will become 100%. Right? If you still have a doubt, if you basically take this example, 50 rupee is a tax, which means the price of the product is also 50 rupee. At least now, is it okay? If 50 rupees tax, price of the product is 50, which means the tax is 100%. You're imposing a tax rate of 100% of the price. So now tell me, when the fuels are taxed, again both center and state put together, when fuels are taxed at 100%, if you bring them under GST, if you have a GST rate on the fuels, what is the maximum rate of GST that you can have? You can have a maximum rate of GST of 28%. Maximum rate of GST is 28%. You can have cesses, right? But maximum rate of GST is 28%. What is the guarantee that the cesses will be given to the state governments? Right? In that 28%, the state will get 14%. The state will get 14%. Many of you will say, but sir, you can increase, you can collect more taxes by imposing cesses. Please tell me, cesses by nature, do you think there is a compulsion on the center to distribute that with the states? Please think of it. You can increase the tax rate, effective tax rate, you can increase it by adding cesses. But is there a compulsion on the center to distribute cesses to the states? Absolutely no. Absolutely no compulsion. Right? So don't you think state governments will be losing lot of tax revenues if it is brought under GST, or if there is a GST rate on it? It is already under GST, but we do not have a GST rate. So that is the precise reason. Even today, there is a lot of friction between the center and states. Center says, let's bring it, let's have a GST rate for this. State say, no. We will not give away this also, because we are collecting lot of tax revenues just like central government. We will not give away even this taxation power. That is the reason even today there is no GST rate on aviation turbine fuel. There is no GST rate on petrol. There is no GST rate on diesel, etc. Right? So all of you okay with this? This is there in the current affairs. Please be very, very careful. Now let me go forward. Next concept, GST network. GST network. GST network. Now what is this GST network? GST network is an authority. It is one authority which has been established by Government of India, and GST network is referred to as an authority, a non-profit organization. An authority, which will work for a non-profit, cause. It is not going to earn profit and give it to Government of India. These are generally referred to as Section 8 companies. Remember this. These are generally referred to as Section 8 companies, non-profit organizations. Now, many of you will simply say, sir, if they earn profit, what will they do? Please understand the logic behind it. Whenever you come across the term non-profit organizations, they might be making more money than what they are spending. Their revenue can be greater than their expenses. Perfectly possible. But argument is, if any company makes a profit, who will get the profit? Tell me. If any company makes a profit, who will get the profit? The profit will go to the owner of the company. But in case of a non-profit organization, whatever the profits which are generated by the company, it will not go to the owners. Again, the profits will be invested back in the business only. Owners will not take away any profit. That is the reason these are called as non-profit organizations, NPOs, non-profit organizations. For example, charitable organizations. Look at the name, charitable organizations. These are called as non-profit organizations. Do you think charitable organizations are working for profit? Even if they make profit, do you think the owners of the charitable organization will take away the profit? Answer is no. It's not allowed. It's not allowed under the Companies Act. So generally these are called as non-profit organizations or Section 8 companies. Now, what is the role of this GST network, Goods and Services Tax Network, GSTN? The GST network is an organization which has been set up by the government, which will provide back-end support, infrastructure support for the implementation of GST. For example, many of you ask me, sir, what do you mean by infrastructure support, back-end support? Let me give you a very simple example. If you have gone to any shop, please do let me know. Can you see GST number, registration number of the shop being displayed? You have gone to a restaurant. Are they displaying their GST registration number? Right, sir, I have not gone to any shop. I have not gone outside home only. My dear, you might have ordered something on Amazon. You might have ordered something on Swiggy. You will get a bill. Please check the bill. Please check the bill. In the top of the bill, maybe the second line or the third line will be their GST registration number. Right now, who is going to provide their GST registration number? There has to be some authority which will provide a registration number for all these companies, suppliers, sellers in the market. There has to be some authority which will have a website which is running where applications can be filed, where documents of the companies can be submitted. Can I say this is infrastructure support? Let me know. Can I say this is nothing but infrastructure support or back-end support which is provided for the implementation of the GST? So that role, right, that authority which will provide this kind of a infrastructure support or a back-end support for implementation of GST is called as GST network. GST network. Okay, so what are the functions? Profile of taxpayers, analysis of the profile. Right, so how many taxes have been paid, right? How many products they are manufacturing, have they submitted the documents or not? All these analysis will be conducted by GST network. Registration of the taxpayers, filing of the documents, returns means documents. Okay, filing of the returns is nothing but filing documents with the authority. All of these are the functions which are conducted by the GST network. 50% of the GST network is owned by the center, and remaining 50% of the network is owned by states collectively. Right, so this is basically one more point, again not very important, but for whatever reason so far UPSC has not asked a question regarding GST network, although it's important in terms of, let's say, kind of support it provides, the role it plays, it is important, but UPSC has so far not touched it. Suddenly they might ask a question regarding GST network next year. Please be very careful. Okay, so this is a GST network. Next, concept of anti-profiteering. Concept of anti-profiteering, and I'll connect it to current affairs. Now, first and foremost, what do you mean by anti-profiteering? And before that, what do you mean by profiteering? Let me explain. What do you mean by profiteering? Let me explain. Profiteering simply means, understand this, a seller in the market is unfairly making excessive profits. I'll give you an example. Just wait for a minute. Whenever a seller excessively, unfairly makes excessive profit, that is called as profiteering activity. Now, sir, how can a seller make excessive profits which is unfair, right? Unfairly making excessive profits. How is that possible? Let's start. Imagine I'm selling this bottle, right? I'm taking a friend as an example. Imagine I'm selling this bottle, including profit. Including profit, I want to sell it at 100 rupees. I want to sell it at 100, including profit, by the way. And currently, imagine government of India is imposing a tax of 18 rupees, which means I will sell in the market at 118 rupees. I will sell in the market at 118 rupees. And if you're confused, I'm simply saying selling price is 100, and GST rate is 18%. 118 rupees. And let's say hypothetically, my profit out of 100 rupees is 20 rupees. That is my profit out of 100 rupees. Now government tomorrow, GST Council tomorrow will announce reduction of GST from 18% to 5%. Think of this very carefully. I'll ask you a question now. Government tomorrow will announce a reduction in the GST rate from 18% to 5%. If everything else remains the same, that is, raw material doesn't change, labor cost doesn't change, etc. If I decide to sell it at 114 rupees, am I making unfairly excessive profits in the second part of the equation? Let me know. Right? A very simple example. Again, I'll repeat it. Listen carefully. Right now, GST rate is 18%. Imagine the selling price is 100, including 20 rupee profit. Right? So I will calculate 100 rupee plus 18%, 118 rupee. I will sell it to you. Tomorrow, the GST Council will reduce the GST rate from 18% to 5%. My labor cost will not change. My transportation cost will not change. Raw material price will not change. Nothing will change. I will reduce my selling price from 118 rupees to 114 rupees. Now, don't you think in the second situation, I'm making unfairly or I'm having an unfair practice where I'm making excessive profits? Correct? Right? So that is called as profiteering. This is called as profiteering. In simple terms, let me put the same in a different way. Whatever we have discussed, same thing in a different way. Can I say, I as a seller, I am not transferring the complete benefit of tax reduction to customer. As a seller, I am not transferring the complete benefit of tax reduction to the customer. And some of you are saying, sir, it is not wrong. Sellers can do this. My dear, no, sellers can't do this. That is the point I'm trying to make here. Sellers can't do this. Why? Their raw material cost has not changed. Their profit motive has changed. They are unfairly making excessive profits. Out of what? Out of tax reduction done by the government. Government is saying, I'm reducing the tax. Right? Why? What is the reason? I want the benefit to be given to customers. You should reduce the prices by the same proportion. Is it okay? You should reduce the prices by the same proportion, which means if the seller, even after GST is reduced, earns the same amount of profit as earlier, he should be selling the product not at 114. He should be selling the product at 105 rupees. Don't you think this will be a fair price, assuming or considering the complete benefit is transferred to customer? That is, the tax reduction completely provides benefit to customer. Is it okay? Right? So understand this. Some of us saying it is fair game. Sellers can do this. No, sellers can't do it. Sellers should not be doing. They are not allowed to do it. Why? They are penalizing customers at this particular juncture. They are penalizing customers by not transferring the tax benefit. They are earning more profit. This is called as profiteering. Right? This is called as profiteering. So there are chances that profiteering will happen in the market. Profiteering will take place in the market. So what can be done? And please understand, as a customer, if you are looking at the market prices, as a customer, I will never be able to understand how much is the tax component, how much is the actual selling price, etc. For example, let me prove it. Right in front of you, there can be a water bottle. There can be, let's say a chocolate bar. There can be, a drink, whatever, soft drink, fruit drink, etc. packaged ones. Please take it up, look at it, turn it back. There will be MRP, maximum retail price, MRP. They'll write maximum retail price 30 rupees inclusive of all taxes. Inclusive of all taxes. Please tell me, is it correct? They would have written 30 rupees, 20 rupees, 5 rupees, 8 rupees, whatever the MRP is. They would have written inclusive of all taxes. Now, will you be able to ever come to know how much is the tax component in this? I hope you understand, right? It's very difficult for you. It's very difficult. They don't give a breakup. Selling price was this much, factor cost was this much, right? We adjusted for production taxes, product taxes, and then transportation cost, hence a selling price plus a GST. No, you will not come to know. So even if there is a profiteering activity, very difficult for the customers to come to know. Some cases they will know, because for example, let me give you another example here. You go to a restaurant, can you compare the bills and say how much GST they are charging you? Think of it. You go to, let's say, McDonald's, you go to KFC, right? They will give you a bill, and in the bill they would have clearly written what is the GST. They would have written what is the GST. So when such bills are given, you can find out, okay, whether they are trying to profiteer at the expense of your, right, let's say, your expenditure. But in most of the cases, very difficult. So what can be done in that instance? Government of India earlier had set up one authority. The name of the authority was basically National Anti-Profiteering Authority. National Anti-Profiteering Authority, NAA. National Anti-Profiteering Authority was set up. This National Anti-Profiteering Authority had the purpose or had the objective of taking up profiteering cases. If a customer will file a complaint, they will take up this case. If they feel that some of the companies are involved in profiteering, they will take up the cases automatically. So moto, right? So the National Anti-Profiteering Authority will take up these cases and will give rulings. That is, the rulings were in the nature of either penalty was imposed on the companies, and most of the cases penalties were imposed. In extreme cases, the government, that is, sorry, the National Anti-Profiteering Authority had the power to cancel the registration of the companies itself. Right? So this was the role, or this was the authority which was set up by the government. Now, next point. The authority was set up in 2017. Authority was set up in 2017. Now, when the authority was set up, there was a sunset clause. There was a sunset clause of 2 years. Now, very often you will come across the term sunset clause. Please understand, sunset clause simply means expiry date. Sunset clause simply means expiry date. So initially when it was set up, we had a sunset clause of 2 years, which means the authority will close after 2 years. So we set up the authority in 2017. So 2 years, which took it to 2019. Again in 2019, the GST Council decided, let's extend it by another 2 years. Let's extend by another 2 years. So it was extended. The working of the authority was extended till 2021. After that, again it was decided, let's extend it by 1 more year. Today, understand this, as of today, is this authority working? No, this authority has wound up. The National Anti-Profiteering Authority has been closed. It has been wound up, right? And what will happen if there are profiteering cases then? The authority which has been asked to take up all these profiteering cases now is Competition Commission of India. Remember, this can be asked in prelims. Competition Commission of India. The Competition Commission of India has been asked to take up all these anti-profiteering cases or allegations of profiteering by companies. Right? So these are certain important points or certain measures which have been taken by the government to address the issue of profiteering in the market. Okay, can we go forward now? Anybody has an issue? Can we go forward? Okay, great. Let's go forward. Okay, what was the situation pre-GST and post-GST? Okay, pre-GST and post-GST. Okay, let's start. Okay, before that, So if a product price is 1 crore, tax included, and considering if tax is 30 lakh, all expense of product is 40 lakh, then if the seller fixes profit on the product as 30 lakh, will it be profiteering? How? What you're trying to do here? 1 crore, considering tax is 30 lakh, all expense of product is 40 lakh, then if seller fixes his profit on the product 30 lakh, will it be profiteering? No, that will not be profiteering. Right? You have decided a profit now, but later, right? Let's say government will reduce the taxes from 30 lakh to 20 lakh. Government will reduce the tax from 30 lakh to 20 lakh, but you still sell it at 1 crore rupee. That will be profiteering. That will be profiteering, right? So argument is simple, my dear. Please understand. Many of you keep on arguing with me. No. Seller should be allowed to sell at whatever price, etc., etc. You please tell me, any tax, any indirect tax that is imposed on the bottle should be paid by whom? Think of it. Any indirect tax that is imposed by the government on this bottle should be paid by whom? Right? It should be paid by the customer. But when in profiteering, what you're doing? You're basically trying to ensure that in profiteering, you will earn more profit by not transferring the complete reduction of the taxes to customer. Is it not wrong? Think logically. You're not transferring the complete benefit of tax reduction to the customer. Whereas the logic says whatever is the taxes on the customer should be paid by the whatever is the taxes on the bottle, indirect taxes, should be paid by the customer. So when it is increased, you will transfer it to customer. When it is reduced, you will not transfer it to customer. Is it not wrong? It is wrong, right? And if you still are right, basically adamant saying that no, everything is correct with the seller, they can do whatever you want, try doing it. Government of India will take action against you. Okay, done. Next, what is the situation pre-GST and post-GST? What has changed? Again, don't by heart the table. Please do not by heart table. UPSC will not ask you. Understand this. The number, or let's say the amount of the taxes which were subsumed, right, before GST, how much revenue was collected by the states, how much revenue was collected by the central government, right, how much service tax was collected by the union government, etc. Data is given. Again, please understand, do not by heart the data. Do not by heart data. UPSC will not ask you the data. What you need to understand is, please look at this. The total taxes which have been subsumed under GST, that is the central government level, state government level, the total taxes, the amount that was collected back in financial year 17 is 7.55 lakh crore rupees. 7.55 lakh crore rupees. Now, please tell me, compare that with GST collections. Total GST collections, compare that with total GST collections. Can I simply say, right, over a period of time, under GST, the tax revenue collection has improved. Look at the table. Don't by heart anything here. Please do not waste your time. Just observe and tell me, once the GST has been introduced, don't you think the GST revenue collection, right, compared to earlier pre-GST, whatever taxes were collected, now same taxes when they're covered under GST, don't you think same taxes when they're covered under GST, the revenue collection has increased for the government? Anybody has a problem? Right? No, there should not be any problem, by the way. There should not be any problem. It's a factual information. Amount of taxes you are collecting has increased. Good. It's a benefit for government. Right? So that is basically idea. The number of taxpayers under GST compared to pre-GST has increased. Amount of taxes collected under GST compared to pre-GST has increased. Which are benefits for the government itself. Okay. Apart from this, there is one more term, tax buoyancy. We'll come back to this. Don't worry, because I've not yet explained, I've not yet discussed what is tax buoyancy. We will understand tax buoyancy, come back to this, and you will only tell me, yes, increased tax buoyancy is always better. It is good for India. Okay. Now, what are the concerns regarding GST then? What are the issues regarding the GST? One, compliance burden is very high. Compliance burden is very high. Now you will ask me, sir, what do you mean by compliance burden? Please understand this. Compliance simply means what are the expenses which are going to be incurred to follow, to basically implement the guidelines of Government of India. What are the expenses? What are the costs that will be incurred to follow the guidelines of government? Now you will ask me, sir, how compliance is associated with GST? Let me give a very simple example. Imagine I was a manufacturer, I was a seller earlier. Now under GST, Government of India tells me on monthly basis, you'll have to file documents. You'll have to keep on filing documents to the government. Monthly basis, keep on filing. Quarterly basis, again there are more filings. I am not an expert. I don't know what documents government is seeking. I don't know what format the documents have to be there. I earlier did not even have a printer. Now, please tell me, because of GST, will I be forced to purchase a computer? Will I be forced to purchase a printer? Will I be forced to hire an expert who on behalf of me, who will keep on filing documents to the government authority, which means again expenses. So now looking at this, can I simply say the compliance burden because of GST has increased in India? Anybody has an issue? The compliance burden because of GST, because I will have to purchase a printer now. Every transaction, everything that I will sell, I'll have to keep on generating receipts. Right? I'll have to keep on collecting all the documents. I will hire somebody, an expert, who will file documents on my behalf. I'll have to get my results audited, that is the financials audited by a chartered accountant now under GST, which means I'm going to incur expenses. I'm going to incur more and more expenses because of this. So compliance burden will be higher. Second one, multiple tax rates are there. This is a problem. We have discussed it earlier. We need to reduce the number of tax rates under GST. There are issues regarding revenues of the state governments. Yesterday also we have discussed it. During pandemic, the state revenues have fallen down. Right? There have been instances of even companies not reporting the right amount of revenue or right amount of sales and paying taxes to government. Even today, the states argue that the amount of revenue that they should be collecting, if there was no pandemic, they should be collecting should be higher. But because of pandemic, their revenues have been affected. Compensation should be continued by the government, etc. So there are concerns regarding the revenues, right, for the government. And there are also certain goods which are exempted, right? For example, alcoholic liquor for human consumption, electricity, etc. These are exempted. There is no GST rate applicable on this even today. They are not covered under GST. If you ask me, sir, why they are not covered under GST, please tell me. We are fast approaching New Year now. Can you imagine the amount of taxes state governments will collect on alcoholic liquor for human consumption? Think of it, right? Can you imagine the amount of tax revenue the state governments generally collect, not just Christmas or New Year, generally collect based on alcohol that is sold for human consumption? That amount is very, very huge. Amount is very, very huge. So state governments do not want to give it away again. Right? They don't want to give it away under GST. They want to keep it with themselves so that they can adjust the rates based on their requirements. Right? So exempted goods, our argument is you cannot have certain goods out of GST. You'll have to bring all of them under GST. So these are some of the concerns regarding the goods and services tax model that we have in India. Okay, so that is the end of the GST for you. That is the end of goods and services tax discussion for you. Can we go forward now? Can we go forward? Anybody has any issue, any concern? Some of the students are saying, but sir, when you discussed anti-profiteering, the same thing is done by the government. My dear, government is allowed to do that. Government is allowed to do that. Government can change the taxation policies. Why? Please understand this. Government will say, I am changing the taxation policy not to earn profit. Do remember this? I've told you, governments do not work for profits. Government is not working for profit. Government will adjust the taxation policy, use the money For expenses. Do you think government is earning 500 crore rupee profit? Prime Minister will get some amount, right? A share of the profits will go to Prime Minister, right? Let's say the Finance Minister, etc. No, my dear. Government is not a company. Always remember that. Government is not a company. So whatever taxes the government will collect, they will not give it as a profit to the owners. No. They will again use it for expenses. That is the reason, even if the government will change the taxes, if the crude oil prices will go down and they will increase the taxes, nothing wrong with that. Nothing wrong with that, because again, please understand, I'm talking from the economics angle. Nothing wrong with that, because government will collect money, use it for expenses. Now you can always criticize. You can always criticize, raise a concern saying that benefit is not being transferred to customer. Correct. Your concern is correct. Second one, if the market prices in the international market come down, complete benefit is not given to customers. Correct concern, right? It will become a burden for poor people when they will consume. Correct concern. It can cause inflation because the transportation cost will increase now. Correct concern. So I hope you understand, you should have both the sides of the coin. Both the sides of the coin. Right now, you can also raise a concern, how is the government using this money for expenses? Right? For what purposes are they using it? Please tell me. Government will use this amount of excise duty that they've collected. Let me know. Government will use this money, that is excise money that they have collected on petrol and diesel, for construction of road. Is it acceptable to you? Think logically. Think like an economist. They will use this excise money that they have collected to construct road, construct a port, to provide skilling to the people. Of course, yes, very good usage. But on the other side, they will use this excise money to provide loan waiver for the farmer. To provide loan waiver for the farmer. Loan waiver simply means, please understand, farmer will take a loan from a bank. This loan will be repaid by the government. Farmer doesn't repay it. Government will repay the loan. And some of you will start criticizing me. Sir, why are you against farmers, etc., etc.? My dear, World Bank report, not me. World Bank report itself has stated loan waivers are not effective. Loan waivers are not effective. Why? Please tell me, if a farmer is there, this year, the farmer's loan is repaid by the government. Does it mean farmers, all the problems that the farmer is facing are addressed? Please think of it. Always think rationally. Right? Does it mean all the problems that the farmer is facing are addressed? And in fact, farmer face lot of problems in India. We'll discuss that when I take up agriculture. Lot of problems. For example, rainfall is very high. Farmer is in a problem. Rainfall is very low. Farmer is in a problem. Fertilizer is not available. Farmer is in a problem. Production is very high. Supply very high. Market price will crash. Farmer is in a problem. Supply is lesser. Government will import from the foreign market. Increase supply. Farmer is in a problem. So I hope you understand. I hope you understand. There is a statement. There's a statement. Loan waivers is a band-aid. Loan waiver is a band-aid. What agriculture requires is a surgery. Please do let me know. Does it make sense? Does the statement make sense to you or not? Loan waiver is a band-aid. What agriculture requires, what this sector requires is a surgery. So I hope you understand. So again, please understand the logic I'm trying to convey you of. You can always have certain concerns. You can always have certain concerns regarding the government policies. But please understand both the sides of the argument. Always have both the sides of the argument. Why is the government doing it? What is the usage of it? Right? Are there any concerns regarding this policy of the government? Have both the sides of the argument. Convey the same if at all a question is asked. Okay? Done. So let me go to the next. Other concepts related to taxation. Other concepts related to taxation. First one is tax buoyancy. Second one is tax elasticity. Third one is tax expenditure. Fourth one is tax to GDP ratio. Tax buoyancy, tax elasticity, tax expenditure, and tax to GDP ratio. Let me start with the tax to GDP ratio. Tax to GDP ratio is simply a ratio of how much taxes the government has collected to the GDP of the government or GDP of the economy, GDP of the country. Okay, so how much taxes has the government collected divided by GDP. Now imagine I'll take a simple example. You have collected 100 crore rupee taxes and your GDP number is 500 crore rupees. You have collected 100 crore rupee taxes, right? And the GDP is 500 crore rupees. Now, please tell me what is the tax to GDP ratio? Let me see. What is the tax to GDP ratio? Please tell me what is the tax to GDP ratio? Are Baba, calculate. Right? Some of you make a mistake even in this calculation. Can I say tax to GDP ratio is 20%? Tax to GDP ratio is at 20%. All of you okay? All of you okay? Tax to GDP ratio is 20%. Right? So now understand what is the issue. What is the issue? How do you understand the importance of tax to GDP ratio? Point number one, whenever you are talking about tax to GDP ratio, it has a huge implication regarding the finances of the government. Regarding finances of the government. How? Whenever the tax GDP ratio comes down, falls down, whenever the tax to GDP ratio falls down, can I simply say, if it is lowering, it is falling down, it is a lower number, it will increase the reliance of the government on borrowings from the market. I'll repeat the statement. Please think of it. Whenever the tax to GDP ratio is lower or will start declining, it will increase the reliance of the government on borrowings in the market. Because please understand, government wants to spend, let's say hypothetically, government wants to spend in this year 500 crore rupees. Government wants to spend, right, 500 crore rupees. And when government wants to spend 500 crore, if the tax to GDP ratio comes down, it simply means amount of taxes collected by the government will go down. Correct? Amount of taxes collected by the government has gone down. And when the amount of taxes collected by the government goes down, out of 500 crore, instead of let's say 100 crore coming from taxes, now government might be in a position to collect only 80 crore rupees in the form of taxes. And instead of 100 crore, if the government will collect 80 crore, the borrowings of the government will increase from 400 crore to 420 crore rupees. So straightforward, if the tax to GDP ratio will start coming down, if it is a lower number, reliance on the market borrowings will become very, very high. And that is a cause of concern. Cause of concern. Why? If you borrow more, you'll have to repay more. Very simple logic. If you borrow more money, you'll have to repay more in the future. Interest is a burden. Repayment is a burden. So that is the precise reason tax to GDP ratio is a very, very important indicator. Now, what is this indicator in the context of India? What is the number in the context of India? Tax to GDP ratio generally in the context of India is somewhere in the range of 17 to 19%. It is in the range of 17 to 19%. Right? Is it good? Is it bad? Compared to other countries, India is lagging behind. Compared to other countries, for example, within BRICS community. Have you heard of BRICS community? Please do let me know. Have you heard of BRICS community? BRICS is a grouping. Brazil, Russia, India, China, South Africa. Generally within BRICS community, India has one of the lowest tax to GDP ratio. When you compare it to OECD economies, Organization for Economic Cooperation and Development. When you compare to OECD economies, in case of OECD economies, the tax to GDP ratio is more than 30%. It is more than 30%. It is 34, 35, etc. like this. In the context of India, 17.5%, 17.6%, etc. So there is a huge scope of increasing tax to GDP ratio. Now, many of you will simply say, sir, why? Why is the tax to GDP ratio lower in India? Why is the tax to GDP ratio lower in India? The reasons are, can I say, lot of tax evasion happens in India? Let me know whether this is correct or wrong, whether this is making sense to you. Tax evasion is very high in India. Tax avoidance is very high in India. lot of economic activities which should be taxed are not taxed in India. Lot of economic activities which should be taxed are not being taxed in India. For example, historically, agriculture sector in India, historically, agriculture sector has a tax exemption. Right? The agriculture sector has a tax exemption. That is, if you're a farmer, whether you're a rich farmer, whether you're a small farmer, whether you're a very poor farmer, whatever revenue you earn from agriculture sector, no taxes applicable on it. No taxes, whatever it is. You might be earning 1 crore rupees in a year. No taxes on the agriculture income. Right? So the tax evasion is very high. Tax avoidance is very high. The presence of informal economy. Informal economy simply means those those economic activity contributors. It could be a small shop. It could be a tea shop on the roadside. Right? It could be a small manufacturer in a particular area, etc. Lot of these contributors to economic activity, these are not registered with the government. Informal, these are not registered with the government. So informal economy in case of India, that is also ensuring that the tax to GDP ratio is comparatively lower. It is generally lower in India. Okay, so that is one, tax buoyancy. In fact, there is one, that is one, tax to GDP ratio. In fact, there is one more reason why tax to GDP ratio for India is lower. Right? Let me explain the third one now. Let me explain the third one, tax expenditure. What do you mean by tax expenditure? Most of you, if you come across the term tax expenditure, you will feel it is expenditure incurred by the government to collect taxes. But it is wrong. It is wrong. It's a misnomer. It's a misnomer. You feel it is expenditure incurred to collect taxes, but it is wrong. What is tax expenditure? Please tell me. Can I say government by providing exemptions, right, deductions, rebates, etc., will sacrifice some of the tax revenue? I'll repeat the statement. Government by providing rebate, government by providing exemption, etc., will sacrifice some amount of tax revenue. Right? Again, if you have a doubt, if you remember, yesterday I took an example of SEZ. I took an example of special economic zones. Now, what was the feature that we discussed regarding SEZ yesterday? For 5 years, there is 100% tax exemption. For 5 years, there is 100% tax exemption, meaning what? Whatever profits you earn, no taxes will be collected on these profits. Whatever profits you earn for 5 years, no taxes will be collected. Which means, can I say government is sacrificing certain amount of tax revenue. So annually, government by providing rebate, government by providing tax exemptions, etc., will sacrifice a certain amount of tax revenue. That is called as tax expenditure. Now, please tell me, is it okay if I say, if tax expenditure is higher, it will have a negative impact on tax to GDP ratio? Correct? Can I go forward? I'll repeat the statement. If tax expenditure becomes higher, it will have a negative impact. It will reduce the tax to GDP ratio. That is also one of the reasons why tax to GDP ratio is lower in India. Now, first and second, tax buoyancy, tax elasticity. Tax buoyancy and tax elasticity. What is a tax buoyancy? Listen to me very carefully now, because some of the students will get confused between tax to GDP ratio and tax buoyancy. Let's say in 2023, the taxes collected was 100 crore. The taxes collected was 100 crore. And in 2024, the tax collection increased to 120 crore. And for the same 2 years, the GDP, which was 500 crore rupee, has increased to 600 crore rupee. Now, what is the tax buoyancy? The tax buoyancy simply means the percentage change in the taxes divided by percentage changes in the GDP. Percentage changes in the taxes are divided by percentage changes in the GDP, which means it will be 20% divided by 20%. Can I say tax buoyancy is 1? Look at the calculation and please do let me know. And those who are wondering, sir, how did you get 20%? How did you get 20%? I'll give you a break in a couple of minutes. Take out your mobile and start calculating what is the percentage change here. What is the percentage change here? Please calculate, you will get 20% and 20%. Now come to the next point. Higher the tax buoyancy, it is good for government of India. Correct or wrong? Higher the tax buoyancy, it is good for the government. Statement is correct. Statement is true. Nothing wrong with that. Why? If the tax buoyancy instead of 1, imagine, if the tax buoyancy instead of 1 is 2. If the tax buoyancy instead of 1, imagine it is 2. What does it mean? It simply means if the GDP changes by 20%, your tax revenue collection will change by 40%, will increase by 40%. So higher the tax buoyancy, it simply indicates that we are collecting more and more tax. And can I go to the third point now? Higher the tax buoyancy, it will also help in the improvement of tax to GDP ratio. If the tax buoyancy increases, it will also help us in improving tax to GDP ratio. Correct or not? Anybody has a difficulty? Right? That is, let's say if you are in 2020, instead of tax buoyancy being 1, if it is 2, it is not 120 crore, it will become 140 crore rupee here. So don't you think 140 crore divided by 600 crore will have a higher tax to GDP ratio? Right? So answer is again correct. Right? Higher the tax buoyancy, right? There will be an improvement in the tax to GDP ratio. Can we go to the in fact the second serial number second now? Tax elasticity. Right? What is this tax elasticity? It will measure the growth rate in tax revenue collection as a response to change in the tax rate. Please understand. Don't say both 1 and 2 are same. Absolutely no. Right? Listen to me carefully now. Tax elasticity measures changes in the tax collection when there is a change in the tax rate. For example, please tell me, if government will change the tax rate from 5% to 8%, can there be a change in the tax revenue collection because of it? Correct? It makes perfect sense. If government will change the tax rate from 5% to 8%, the amount of taxes collected by the government automatically will change. So we are measuring that in tax elasticity. We are measuring that in tax elasticity. As a result of change in the tax rate, how much is the change in the tax revenue collection? That is tax elasticity. Whereas the tax buoyancy is as a result of change in the GDP, how much is the change in the revenue collection, tax revenue collection? That is tax buoyancy. All the 4 are different. Don't say all the 4 are one and the same. No, all the 4 are different. So these are certain important other concepts associated with taxation in India. Okay. Now, what are the issues? Right? What are the issues? What are the issues associated with taxation? One is issue related to revenue. Issues related to revenue, right? For example, tax avoidance is very high in India. Tax evasion is also very high in India, right? Tax exemptions are also very high in India, right? All of these will have an impact on revenue collection, tax revenue collection of the government. That's the first one. We have to address it. We will have to address it. Most of the economy is not covered under taxation. I told you this. Informal economy. Lot of parts of the economy in India, lot of contributors to economic activities, they are not registered. They are not registered, and because they are not registered, government will find it very difficult to impose taxes and collect taxes. Now, please understand and tell me now. Can I say one way to improve the tax revenue collection will be to promote formalization of the economy? Think of it and please do let me know. One way to promote the tax revenue collection will be to promote formalization of economy. Formalization means, imagine there are certain manufacturers who are not registered with the government. Now under formalization, I will implement certain measures where now they will have to be registered with the government. So if they get registered with the government, can I say it will lead to widening of the tax base? If it will lead to widening of the tax base, revenue collection, tax revenue collection of the government automatically will improve. So formalization automatically will lead to improvement in the tax revenue collection. Government provides a lot of tax exemptions to corporates. We need to address this so that the sacrifice revenues that are sacrificed by the government will come down. And finally, there are certain issues related to GST which we have already discussed. We have already discussed issues related to GST. Just add those points here. Now, before I take a break, please look at the table and tell me, has implementation of GST, right? Look at the last point in both the sides. Please look at the last point in both the sides of the picture, tax buoyancy. Has the tax buoyancy improved after implementation of GST? And if the tax buoyancy has improved, don't you think GST structure, right, it is performing better compared to pre-GST taxation structure? Please look at the numbers. Please look at the numbers. The tax buoyancy before the GST was implemented was below 1, and tax buoyancy for indirect taxes which were subsumed under GST, after the implementation of GST, the tax buoyancy has been more than 1, which means, right, under GST, compared to the GDP growth rate, the tax revenue collection growth rate has been higher. Right? Hypothetically speaking, if the GDP grows by 1%, then the GST revenue collection has increased by more than 1%, which is good. Which is good, right? Which is a favorable outcome for all of us, right? Including government, including the economy, by the way. Okay, so that is the point regarding the concept of tax buoyancy. Done? Okay, so these are certain important points I wanted to discuss regarding taxation. Couple of more points, but we will take it up after the break. Now, before the break, if there are any questions, please do let me know. Sir, I have a confusion. What that GST is destination based tax, but if a state is low in production and a state is high in production, then the producing state will always run in tax loss, and the state will always consume all the time, will not go in profit. Always, if also production is less, is this GST drawback? My dear, I had addressed this issue yesterday. I had addressed this issue. Imagine there is a state which is a producing state, and I think logically. Please always think logically. Please tell me, if you're reading newspapers, all of these doubts will not be there. Right? Let's say a state such as Maharashtra, or let's say Tamil Nadu. Please tell me, or for that matter, even Gujarat. Right? For that matter, even Gujarat. In terms of production, can I say these are producing states? Point number 1. These are producing states. Second, in terms of GDP, this is also very important. In terms of GDP, gross state domestic product, don't you think these states are also very high in the ranking? That generally in the top rankings, these states will be present, and again, it is natural. Don't ask me how they are top in terms of gross state domestic product. If they are majorly producing states, don't you think automatically their gross state domestic product will be very high in India? Of course, yes. Which also means the income that is generated within the same state, income that is generated within the state will also be very high. If income is higher, what about demand for goods and services in the state? What about demand for goods and services? It will also be higher. If the demand is higher, don't you think GST collection will also be higher in the state? Think of it. Does it make sense or not? Does it make sense or not? Of course, yes. It makes perfect sense. And that is the reason I said, if you look at the states, ranking of the states, which are collecting high amount of GST revenue, you will see Tamil Nadu is there. You will see Karnataka there. You will see Gujarat there. You will see Maharashtra there. Why? Higher GSDP, higher incomes, higher expense, higher GST revenue collection. It makes perfect sense regarding that. Okay. What is an example of origin-based tax? Pre-GST, central sales tax. Yesterday we have discussed this. Central sales tax. Sir, I'm not able to understand the economic part of newspaper completely. What to do? My dear, it's like riding a bicycle, riding a cycle. Within one day, within 1 week, you want to become an expert of newspaper reading. Is it a rational expectation? Let me know. Is it a rational expectation? Is it a rational expectation to think that you will become an expert in newspaper reading by reading newspapers within 1 week, 1 month? Answer is no. If you are still thinking, yes, sir, it is perfectly rational, answer is no. It is a process. It is a process, right? Maybe after, let's say, 2 months, after 3 months, after 45 days, you will start understanding what to read, what not to read, right? Where to stop, etc. Okay, so again, please understand it's a process. Get attested, get attuned to the idea of a right in newspaper reading. Do not think like a short sprint. It's a marathon. UPSC preparation is a marathon, right? You behave as if it is a 100-meter sprint. You want to become Usain Bolt. No, right? It's a marathon. It's a marathon. You will come to know over a period of time, right? Don't expect that you will understand everything within 1 week only. Not possible. It's irrational expectation. Okay, done. Any other questions? What did government do to neglect the destination based tax in case of GST? Why should they neglect it? Please tell me, why should they neglect it? What is the point in neglecting that? It's a destination based tax. That's a fact, by the way. Greater the tax buoyancy, it means more burden on people is not good. Please tell. Again, my dear, please understand. Greater tax buoyancy doesn't always mean you are collecting more taxes from poor people. Because please understand, when you say tax buoyancy, you're talking about total taxes collected. You're talking about total taxes collected. The total taxes collected can be direct taxes as well as indirect taxes. Now tell me, out of the total taxes collected, if most of the taxes are indirect taxes, can we say this is regressive in nature? Please participate and do let me know. All these are concepts. Concepts. Books will not give you this. Understand it. If out of the total taxes, let's say 60% of the taxes are indirect taxes in nature, because indirect taxes are universally applicable, now can we come to a conclusion? This is a regressive taxation structure, because you are imposing a lot of taxes on all the people. You're not selectively imposing taxes. You're imposing taxes, most of it on all the people, rich, poor, etc. And that is generally the case in India. That is generally the case in India. That is the reason, if you remember, I told you indirect taxes are regressive. Taxation structure looks regressive in India. Reason being, around 55% to 60% of the taxes collected in India come from indirect taxes. Around 55% to 60% come from indirect taxes. Hence, it is regressive. Okay, done. Now, let me take a break. Before the break, right, many of you are asking, sir, what are the articles in today's newspaper? What are the articles in today's newspaper? One article that I want you people to read is regarding GST Appellate Tribunal. GST Appellate Tribunal. GST Appellate Tribunal. Please read this. What is this GST Appellate Tribunal? You'll ask me, so tell me what is Appellate Tribunal. You have not discussed in the classroom, etc. Appellate Tribunal means, imagine there is a dispute between the government authority as well as the taxpayer. There is a dispute between the taxpayer as well as the tax authority regarding GST. Right? You are saying this product should attract 12%, authority says 18%. You have filed the taxes, they say no, you'll have to pay more taxes. There is a dispute. Right? Earlier, please understand, we had different appellate tribunals. Appellate means appealing. We had different appellate tribunals for excise duty and service taxes. We had a different appellate tribunal for VAT. VAT is a state duty. Right? So different appellate tribunals were there. Number of appellate tribunals were also very less. And as a result of this, the tax disputes in India have increased. Correct? It makes perfect economic sense. Number of tribunals are lesser, right? Whereas the disputes have increased, right? And as a result of this, lot of money is getting stuck up in the economy. Now, Government of India says, we will set up all these tribunals, we will subsume all of them under the GST Appellate Tribunal, right? We will have Two benches, right? This is the information, right? We have two benches under the GST appellate tribunal in every state now. Two benches, one in the capital city and one wherever the commercial hub, economic commercial hub is there, we will set up there. So GST appellate tribunal will be set up. Now, if there is any dispute between the tax agency, the tax authority, as well as the taxpayer, they can simply take the dispute, go to the appellate tribunal. The appellate tribunal will resolve it. Appellate tribunal will resolve it. That is regarding GST appellate tribunal. Two articles are there, right? In Hindu, there are two articles. One, there is a statement given by finance minister. Please read that. Right, the finance minister. There is an article which says the the GST which has been implemented has reduced the prices, provided benefit to the consumers. That is one article. There also they have discussed GST 80, and in business page, right side in the central part, right side in the center part, there's a small article. That is the age limit. Age limit has been decided regarding the GST appellate tribunal members as well as the chairman. Read that as well. Okay, second article that I want you people to read is disinflation. In fact, again, I'm saying GST appellate tribunal, there are two articles. So third article, right, is regarding disinflation. And again, business page, disinflation. Fourth article, inflation. Central page. Fourth article is inflation, central page. In the center page, there is one article, very nice article by the way. The article discusses whether the inflation in India, is it demand pull inflation or cost push inflation? Is it demand pull or right the cost push inflation? Okay, so that is an article regarding inflation. Certain data is given. Don't by heart the data. Graphs are not needed. So as far as I'm concerned, these are the articles. Okay, and if you want, fifth article, the Lok Sabha has passed a telecom bill. Lok Sabha has passed a telecom bill, right? To a certain extent, again, same information that was given earlier. But anyways, Lok Sabha has passed a telecom bill. So if you ask me, sir, what are the important articles in Hindu newspaper in today's edition? I would strongly recommend that you read these 5 articles. Okay, done. Let's take a break now. Before we go on to the taxation reforms, let's take a break. We will restart at 8 2. We will restart at 8 2 a.m. Okay, take a break. Okay, welcome back. Am I audible? Am I audible? Okay, let's start. So next concept I want to discuss within taxation. This will be the last but one. The concept of reforms. What kind of reforms has the government of India taken to address the issues of taxation or to promote, right? Let's say more and more tax collection. Now, earlier reforms we have discussed, right? So don't ask me, sir, what other reforms have they taken? You have not discussed any other reform. Can I say MAT is a reform? GAR is a reform? GST is a reform, right? So earlier we have discussed many reforms. One more addition to that, right? Transparent taxation, honoring honest. There was an initiative, or there is an initiative which has been implemented by the government. Transparent taxation, honoring the honest. Under the transparent taxation honoring the honest, there are three pillars, right? The whole idea of a transparent taxation, right, runs on three pillars. One is called as a faceless assessment, second one is faceless appeal, third one is a taxpayer charter, right? What is the meaning? Let's go one by one, but before that, the transparent taxation measure was implemented or launched by the government in 2020. Under this, government of India wants to promote transparency, efficiency, accountability, right, etc., related to taxation network in India. Right, we are going to promote usage of technology. We are going to analyze lot of data here. We are also proposing to use artificial intelligence. Right, so these are certain points regarding the program that is transparent taxation. But now, what do you mean by faceless assessment, faceless appeal, as well as a taxpayer charter? Faceless assessment simply means, understand the process here. Currently, right, or let's say before the faceless assessment was implemented, a taxpayer was supposed to submit all the documents to the tax department. I'm a taxpayer. In this year, how much money I've earned, where all, right, I've invested in the market, how much tax deduction am I claiming, how much taxes am I paying. All these documents I'm supposed to submit it to government. When I say government, there's a tax department, and I'll have to submit it to the tax department. Now, the concern of the government was that whenever the taxpayer will have an, right, let's say face to face conversation, let's say I will go to the tax office. Again, let me take an example just to make you understand it. Imagine you are the commissioner, your income tax department, you have become a part of income tax department, you are a commissioner in income tax department. So please do let me know, is there a scope of harassment of a taxpayer? Again, I'm not saying you will do it. If I come to pay taxes and submit documents to you, is there a scope of harassment of a taxpayer? Some of you might simply say, right, when you taught economics, right, it was very difficult, right? You do not teach everything, so I will harass you now, just hypothetically. And let's say, is there a scope of corruption in the system? Is there a scope of corruption also in the system? And that is, right, both of us are in very good arrangement. I will not pay correct amount of taxes, but you will not raise any concern regarding that because I'm paying you certain amount of money. So there is no transparency, or there can be concerns regarding transparency. There can be concerns regarding harassment of the taxpayer. There can be even corruption in the system, etc. How do you address it? How do you ensure that all these concerns would be addressed? Efficiency will improve, tax revenue collection will improve, right? And even accountability of taxation officials will also improve. For that, Government of India has introduced a system called as faceless assessment. Faceless assessment. Now, what is this concept of a faceless assessment? Understand this very carefully. I'll take a simple example. Imagine this is my document, right? This is the document. In the document, my details are given. My details are given. Generally, it is done online now. Tax filing is done online. Right? Imagine you're the tax official. When you get this document, now please tell me, if my details are visible, right? Can there be harassment of the taxpayer even then? Can there be corruption even then? My address is there, my name is there, my phone number, my email ID, everything is available to you. So what the government does now is simple. They have set up a centralized system. they have set up National Faceless Assessment Center, NFAC, National Faceless Assessment Center. Whatever income tax returns you file will go to this center. From this center, that document will be distributed to any tax official for evaluation. The documents can be sent to any tax official, but more importantly, the information of the taxpayer, the personal information, name, phone number, mobile, etc., the information of the taxpayer will not be revealed to the official. Is it okay? Information of the taxpayer will not be revealed to the tax official. Right? For example, a set of documents will come to you. You're supposed to check them. There is no information. You cannot come to know who's right, which taxpayer it is. So there is a masking, right? The information of the taxpayer is hidden, not available to the tax official. So if you do not know, right, which taxpayers' documents these are, right, don't you think there will be transparency in the system? Right? If you do not correct them, or if you do not evaluate the documents correctly, there will be accountability on your part, right? So the process will become efficient, harassment will come down, corruption will come down, accountability will increase. This process is called as faceless assessment system. This process is called as faceless assessment system, right? So this is the first pillar. Second pillar, faceless appeal. Faceless appeal. Now, what is a faceless appeal? Imagine my documents have come to you. You have evaluated, but you feel I should pay more taxes. I have not reported certain income, or have misreported certain income. I have not calculated taxes correctly, etc. I have paid certain amount of taxes, but you feel I should be paying more. So what you will do? Through the center again, there is a demand generated. There is a tax demand, a tax notice that is generated, and I'll be getting the notice. I do not have to go to the office now. I don't have to go to the income tax office. I can simply appeal against the notice through the portal itself. In fact, there is a portal, there is a website which has been started by the income tax officials. Right? You can check it in the Google. There is a website. So taxpayers are supposed to be registered there. If there is a demand for the tax notice, it will be sent online. You can reply to that online itself. You don't have to go to the office. You do not have to come to face-to-face contact with the officials, right? Nothing of that sort will be done. This process is called as faceless appeal system. So don't you think under the faceless appeal system, again, we are providing a system wherein harassment of the taxpayers will be reduced. We don't want them to come to the offices. We don't want them to wait for the government officials. I don't want them to get in contact with the government officials. There can be issue with transparency, corruption can happen, etc. So the second pillar of transparent taxation is called as faceless appeal. Third one is just a document which is called as a taxpayer charter. Charter is nothing but a document. In the taxpayer charter, we have certain guidelines for the taxpayers as well as the tax department. For the tax department, the government is saying, whenever the taxpayer will approach you, be fair, be courteous, provide reasonable treatment to the taxpayer. Do not treat every taxpayer with a doubt. Do not assume he is cheating government of India. He is evading taxes. Don't treat every taxpayer like that. Treat taxpayers as an honest taxpayer. Provide a mechanism for appeals. Whenever the demand is sent, tax notice is sent, have a mechanism for appeals as well as review of the system. Provide complete information, accurate information to the taxpayer, etc. So there are certain guidelines which have been given to the tax department. And there are certain guidelines which are supposed to be followed by the taxpayer. For example, whenever you are submitting your details to the tax department, whenever you are submitting documents, submit accurate documents, submit correct documents, collect all the documents which are always required for you to file income taxes over a period of time. Be honest, follow all the guidelines of the government, disclose all the information, right? Whatever is the source of income, how much taxes you are paying, how much deductions you are claiming, is there a receipt for it, right? Disclose all the information to the tax department. Be informed about the compliance systems and new tax measures, new tax rules which have been launched by the government, etc. So in a nutshell, the taxpayer charter is a document which has certain guidelines for both the tax department as well as the taxpayers in India. Right? So these are the three pillars: faceless assessment, faceless appeal, and taxpayer charter. Okay, the last concept within taxation, Laffer curve. Last concept within the idea for taxation, Laffer curve. Now, what is this Laffer curve? Please understand this very carefully. Laffer curve is a theory which has been proposed by one of the economists in USA, Arthur Laffer. In USA, there was an economist by the name of Arthur Laffer, and this economist has come out with a theory which is basically a representation called as Laffer curve. Now, what does the Laffer curve state? Laffer curve simply states that whenever the tax rates are increased by the government, whenever tax rates are increased by the government, the amount of tax revenue collected by the government will keep on increasing, but after certain rate, if the government will increase the tax rate, the tax revenue will not increase, rather decrease. I'll repeat the statement, then I'll give you explanation. Listen carefully. Mr. Arthur Laffer says, whenever the government will increase the tax rate, the amount of tax revenue collected by the government will increase. But after certain rate, right, there is certain rate, if the government will increase the tax rate beyond this rate, then the government tax revenues will not increase, rather they will decrease. Right? This is a representation of Laffer curve. This is basically a statement of Laffer curve. Now, why does it happen? Right? Why does it happen? What is the argument? Are there any issues, problems related to Laffer curve? Let's discuss that. Imagine right now the government of India has a tax rate of 0%. I will ask a question now. Imagine the government of India has a tax rate of 0%. Please tell me, how much tax revenue will the government collect? How much revenue will the government collect? 0 rupees. So can I say starting point of the Laffer curve is the origin of the graph? Correct? Starting point of the Laffer curve has to be origin of the graph. Origin means 0, 0. X coordinate, y coordinate. Origin. Now let's say government will increase the tax rate to 5%. From 0%, government will increase the tax rate to 5%. So automatically, Mr. Arthur Laffer says the amount of taxes collected by the government will increase. Right? How much revenue government will collect will increase. Makes sense also. If it will be increased from 5% to let's say 12%, again, the government revenues will increase. But please understand, Mr. Arthur Laffer says there is certain optimal tax rate. There is a rate which can be called as a optimal tax rate. This T star is optimal tax rate. What do you mean by optimal tax rate? At this tax rate, government revenue collection will be the highest. The government revenue collection will be the highest. This is called as optimal tax rate. Now, before you start asking, is there any way to find out what is the optimal tax rate? No way. Right? Is there a formula to find out what is the optimal tax rate? No, there is no formula given by Laffer. Right? That is the reason number is not given in the line. Please look at it. There is no number mentioned along the x-axis. They have simply written T star. There is no mention. Right? It could be 22%, it could be 40%, it could be 23%. There are problems with this formula. I'm sorry, there are problems with the curve. I'll come to that. But there is no way to find out what is the optimal tax rate. But what Laffer says is, whatever is the optimal tax rate beyond this, imagine, underline the term, imagine optimal tax rate is 30%. Imagine optimal tax rate is 30%. If the government will increase the tax rate beyond 30%, let's say to 40%, then the amount of tax revenues of the government will not increase, rather decrease. Now, first part of the argument should be very clear to you. Higher the tax rate, more revenue collected. But second part of the argument, why beyond T star? Why after T star tax revenues will fall? I'll explain now. According to this argument, it says that whenever the tax rate will cross this T star, people will start feeling more burden of taxation. People will start feeling the burden of taxation. That is, they will start feeling that more I earn, more taxes I'm paying. So what people will start doing is they will start replacing work with leisure. Replacing work with leisure. Do you understand what is work with leisure? Please do let me know. Workers, people will start replacing work with leisure, meaning rather than working more, they will reduce their work, they will start taking more rest. They'll start taking more of leaves. They will start taking more of relaxation. Right? So when they will feel more burdened by the taxation, that Laffer says it will happen after T star, people will reduce their work and they'll start taking more relaxation, or they will become more relaxed now. They will not work more, they will reduce their work. And when they will reduce their work, revenue will come down. And when revenues will come down, whatever is the tax rate, automatically the tax revenue collected by the government will also come down. All of you okay with this? All of you okay? Right? And please understand, sir, is it always applicable? Right? Can we use different rates and try to find out what is the optimal tax rate? In real life, in real time, economy doesn't work this way. In real time, economy doesn't work this way for a very simple reason. Please tell me, do you think how much money, that is the tax revenue collected by the government, is always dependent on tax rates? Let me see. Do you always think, or do you think the government revenues are always dependent on the tax rate? Answer is no. Answer is absolutely no. Don't you think if there is one more wave of the pandemic, whatever could be the tax rate, government revenues will take a hit? Correct? If there is a recession in USA, if there is a recession in, let's say, Germany, UK, European Union, don't you think whatever could be the tax rate in India, economic activity in India would be affected? And because the economic activity in India is affected, automatically tax revenues would be affected. Right? So I hope you understand the argument here. First and foremost, Laffer has not given how to find out optimal tax rate. There is no way to find out. And tell me, if some of you are saying, sir, can we use a trial and error method? Can we use this? If that was the situation, don't you think government of India would have already done it? Let me know. If that was the situation, don't you think corporate tax rate, only one tax rate would have been implemented by the government of India? Right? Don't you think income tax rate, only one tax rate could have been implemented by government of India? Not only in India, but across the world as well. Right? So I hope you understand there are problems with this model. A lot of problems. There is no formula to find out what is optimal tax ratio, optimal tax rate. And this simply assumes, right? Simply assumes a simple relation between government revenues, tax revenues, and tax rate. But there are so many other factors that will influence the tax revenue beyond the tax rate. Right? So that is the reason, right? Laffer curve, there are certain concerns regarding it. Okay. And many of you are asking, sir, then why should I read it? My dear, UPSC tends to ask question on graphical representations. Okay. UPSC tends to ask question, right? If you have seen UPSC exam paper, that is why I'm asking you, please look at the papers. Some of the students keep on asking me, why should I read it then? What if UPSC will ask a question on graphical representation? Then what will you do? Right? So I hope you understand. Okay. Done? Right? So this is the idea for Laffer curve. Right? So this is the end of the chapter, taxation. Anybody has any concern? Anybody has any issue, please do let me know. Otherwise, we will solve questions or take up the next chapter. Let me know. Anybody has any question? Can we say the luxury products have high rate of tax beyond T dash, then people shifted to other products? No. That is not a Laffer curve. I hope you understand. That is not a Laffer curve. Okay. Laffer curve talks about correction between the tax rate and the tax revenues collected by the government. Okay. Okay. What is RFAC? Where is the RFAC mentioned? Where is the RFAC mentioned? And I don't know what is RFAC. I don't know what is the context. You'll have to tell me. What is the concept of Hindu undivided family? HUF, Hindu undivided family. Please understand, whenever you talk about taxation, right? Let's say companies in India, individuals, companies, etc. Apart from that, there is one more unit of taxation called as Hindu undivided families. Hindu undivided families are nothing but there are certain Hindu families which are even today working as joint families. Is it okay? There are certain families which are working as a joint family. So you as a taxpayer, now there is an option that a joint family, that is a family which is basically working together. All the people are there in the family or even extended family, they can choose to pay taxes as one unit. That is called as Hindu undivided family. Okay. Near NFSC, there is RFSC. Where there is NFSC, where there is RFSC. Arey Baba, RFSC, it is there here. Regional Faceless Assessment Center, RFSC, right? Regional Faceless Assessment Center. Okay, done. Right, so these are certain points I wanted to discuss regarding taxation. Questions are there. We'll take it up at the end of the session. We'll take it up at the end of the session. Don't worry. We'll discuss the questions. Do not worry. And those are asking, sir, what are the references? Right, NCRT, are there any references? TN board, are there any references? NCRT, right, very less discussion. I've told you this already. In NCRT, there is very less discussion. There's a chapter in the 12th class macroeconomics book, budgeting. In that, they have discussed taxation, very limited discussion. Right. Apart from that, if you want to have a detailed understanding, right, again, don't read everything also. Detailed understanding regarding taxation, you can use these chapters, right, in the Tamil Nadu board, 11th class as well as 12th class. Chapter name, page number, everything is given. Use it. Okay. Now, next chapter. Next chapter, the concept of money and banking. The next chapter that I'll be discussing is very, very important. Very, very important. Right? That is, if you look at the prelims paper, if at all, let's say around 15 to 16 questions are asked from Indian economy, guaranteed 3 to 4 questions will come from money and banking. Guaranteed 3 to 4 questions will come from money banking. So this chapter, as far as prelims is concerned, is very important. For whatever reason, questions from money and banking have not appeared in the last 5 years in the mains examination. Okay. Now, what are the points I'll be discussing? What are the points I'm going to discuss? Money and types, bank functions, banking structure, Reserve Bank of India, issue of bank mergers, lending rate regime, Basel guidelines, NPA, payment banks, small finance bank, right? NARCL, lot of current affairs. Lot of current affairs we'll discuss in the chapter of money and banking. Now, let me start. Let me start. What do you mean by money? First point will be, what do you mean by money? Please understand, money is nothing but mode of exchange. Money is nothing but mode of exchange, or else they will also say money is nothing but mode of payment. Mode of payment. Now you will ask me, sir, what do you mean by mode of exchange or a mode of payment? Let me explain. Listen to me carefully. Before we started using money, there was a concept of barter system. Before we started using money, there was a concept of barter system. Now, what would happen in a barter system? Certain goods or services are exchanged. I repeat, certain goods or services are exchanged for other goods and services. For example, under the barter system, I can exchange this marker with a bottle. Is it okay? I can exchange this marker with a bottle. That is, in simple terms, under the barter system, money was not used. Instead, direct exchanges of goods and services was conducted. There was no money. There was no mediation. There was no intermediary called as money. Direct bottle will be sold and pen will be purchased. and pen will be sold and bottle will be purchased. So direct exchanges of goods and services, right? That is called as barter system. But there are problems with the barter system. What kind of problems? Let's say instead of bottle, let's say I have apples. Think of it. Please be very careful with all of these concepts. Instead of bottle, imagine I have got apples. So don't you think the apples being a perishable product, perishable means within short period of time, 2 days, 3 days or 4 days, quality will be lost, quantity of apples will also be lost. Apple being a perishable product, don't you think I'm in urgency? I'm in an urgency to sell apples in the market. Correct? I'm in an urgency to sell apples in the market. That is one problem. Perishable goods, very difficult under barter system. Second problem is, understand this carefully. I want to sell apples and in return, I want to purchase pen. I want to sell apple and in return, I want to purchase pen, which means under barter system, I will have to keep on searching in the market. I'll have to keep on searching in the market who is willing to purchase apple and willing to sell pen. This is called as a double coincidence of wants. This is referred to as double coincidence of wants. I'll repeat it again. Please understand it. Right? I'm having apples. I want to sell apple. I want to purchase pen, which means I will have to search in the market anybody who is willing to sell pen and willing to purchase apple. This will take a lot of time. This will also need a lot of resources to be utilized, time, etc. So this is called as a double coincidence of wants. Right? So don't you think having a double coincidence of wants is also a limitation of a barter system, is a problem in the barter system? That is a precise reason over a period of time, we have replaced barter system by using money as a mode of a payment, as a mode of a transaction, mode of a exchange. What do you mean by that? Today, let's say today, I've cultivated apple. I want to purchase pen. Do I keep on searching in the market who is willing to sell the pen, or first I will sell apples, I will get money and I will use the money to purchase pens? Is it okay? Right? Don't you think now rupee, right? The money that is there in the system is acting as a medium of exchange. Correct? Rupee is acting as a medium of exchange. Money will act as a medium of exchange. Right? So earlier barter system, there was no medium, direct transaction, direct exchange. But now we will first exchange apple with money. I will have money. Now I will exchange money with pen. Right? So rupee will, or money will act as a mode of a exchange, a mode of a transaction in the market. And the benefit of this is I don't have to keep on searching, right? There is no issue of double coincidence of what's now. I don't know. I'm not worried about double coincidence of wants. I can simply sell apples, get money. That is the first one. Second one, earlier if I have apples or let's say vegetables, if I do not find a buyer, right? Buyer in the sense who is willing to buy this and sell me pen, they will be lost. They will be simply lost. The quality will be lost within 2 days or 3 days. But now, nothing to worry. I will sell the apple today itself. I will get the money. Money is acting as a storage of value. Money will act as storage of value. I will sell the apples, get 100 rupees. Don't you think if I had kept apples for 3 days or 4 days, quality would have been lost? I will not get 100 rupee, but I will sell. I will take 100 rupee, keep it with myself. It is acting as a storage of value. I'll keep it for 4 days, 5 days, 1 week, 1 month, right? 100 rupees there with me. It will act as a storage of value. So that is the reason, please understand, over a period of time, we have shifted from the concept of a barter system to the concept of money. Okay, that is a point number one. Point number two, right? Point number two, how many types of money are there in the system? Okay, how many types of money are there in the system? Right? Earlier, what was the type of money? Now, what is the type of money we are using? Let me start with the second one in this example. First one is commodity money. Second one is fiat money. Let me start with fiat money. Now, all of you, I'm pretty sure, all of you, if you open your purse or wallet, you will have, let's say, 100 rupee, you will have 20 rupee, or you will have 500 rupee, you might have even 2000 rupee note. So the currency notes or currency coins that you are having is called as fiat money. Is it okay? I'll repeat it. The currency notes or currency coins that you have or I have, your neighbor has, your parents have, it is called as fiat money. But why it is called as a fiat money? Fiat simply means the value for the money is given through the order of the government. Fiat is nothing but order. So the government, through its order, is giving value to a piece of paper or a piece of metal. For example, take this. Take this. Right? Today, can I simply say this is simply a piece of paper? Let me know. Please participate. Once you understand with examples, you can remember it for very, very long duration. Today, can I simply say it is a piece of paper? What is the value in the market for piece of paper? It is worthless. Today in the market, the value for this piece of paper is worthless. There is no value in the market. But what if tomorrow government will write 100 rupees on this piece of paper and say this piece of paper has a value of 100 rupee? Now tell me. Right, tomorrow government of India, right, again how they do it, right, who will print, etc., you will understand in some time, don't worry. Tomorrow government of India says, right, this piece of paper on which we have written 100 rupee will carry the value of 100 rupee in the market. So now can I say through the order of the government, because the government has given an order, this piece of paper now will become equivalent to 100 rupee in the market. All of you okay? Right, so fiat money, what is fiat money? Through the order of the government, we will give certain value to this money. Either otherwise it is simply a piece of paper or piece of metal, which doesn't have value in the market. But because the order is given, government will give the order, hence the value is given for this. That is the concept of fiat money. Now there's a term called as, two terms I'll discuss. There's a term called as liquidity, and there is also a term called as intrinsic value. There is intrinsic value as well as liquidity. Let's understand both of these terminologies. What do you mean by intrinsic value? Intrinsic value means what is the worth, what is the value, what is the worth of the product in the market. Now please tell me, this piece of paper, what is the market value for this? This piece of paper, what is the value for this? Absolutely no value in the market, correct? So can I say intrinsic value for this piece of paper is zero? I hope you understand. This piece of paper, it is simply a piece of paper. It has no value in the market. But imagine government will write 100 rupee on this piece of paper and say this piece of paper now in the market is equal to 100 rupee. So can I say in case of fiat money has no intrinsic value, correct? Fiat money has no intrinsic value because the government through the order will give value, the money will have value. Let me replace this with another example, right? Think of it, please think of it. Let me replace this with another example. Imagine there is a gold coin. Imagine there is a gold coin. Now, please tell me, will the gold coin have intrinsic value? Instead of piece of paper, I will replace this with gold coin. Will the gold coin carry intrinsic value? Answer is yes, by the way. Gold has a market value. You're writing something on the gold. Don't worry about it. But gold itself has market value. So whenever anything that has intrinsic value, such as gold, such as silver, such as bronze, is actually used as money, I will call this as commodity money. Is the logic okay? Right, I'll repeat it again. Anything that has a market value, that has an intrinsic value, that is being used as, right, let's say money. Money means mode of a payment, a mode of exchange. You will use gold for making payments. You will use silver coins for making payments. You will use bronze coins for making payments. And bronze, silver, right, gold, etc. They have market value, they have intrinsic value. So whenever these kind of commodities means anything that is produced and has market value is called as commodity. So these commodities earlier, not today, earlier were used as money, as mode of payment, as a mode of exchange, and that money was called as commodity money. So commodity money examples are gold coins. Please tell me, when you are reading modern India, medieval India, not specifically modern India, but let's say medieval India, have you come across gold coins? Have you come across bronze coins being used for conducting transactions? Yes. For mode of a payment, mode of a transfer? Yes. That is called as commodity money. That is called as commodity money. The commodities which will have intrinsic value are used for conducting payments, for making payments, for conducting transaction, commodity money. So commodity money will have intrinsic value, whereas fiat money will not have intrinsic value. Through the order, it will be given value. Now, right, commodity is used as money. Value of money is dependent on the intrinsic value, closely related to barter system, closely related, because commodities were used. Rupee was not used, dollar was not used, right? Commodities were used, that is pearls, gold, bronze. These are commodities, hence closely related to barter system. Examples of commodity money include gold coin, bronze coin, silver coin, pearls, precious stones, etc. Okay. Next one is fiat money. In this fiat money, there is one more feature, liquidity. In case of a fiat money, there is one more feature called as liquidity. Now, please understand this. Liquidity means how quickly you can convert the asset, how quickly you can convert the asset into money. How quickly the asset can be converted into money, that is called as liquidity feature. Now let me ask you simple questions. Please participate and do let me know. Today, imagine you have 1,000 rupee in one hand, rupees in one hand, and 1,000 rupee worth of gold in the other hand. Please tell me, in the market, will they accept rupees for conducting transaction, or will they accept 1,000 rupee worth of gold for conducting transactions? All of you will agree? Sir, they will accept rupees. Somebody might accept gold, but there is always a doubt. Some of you will say, no, sir, I will use gold. My dear, go to a shop. After the class is over, go to a shop. Purchase goods and try to give a gold piece to the owner and say, instead of money, take this gold. The shopkeeper will throw it at you and say, don't try to cheat me. I don't know whether this is gold or not. How should I trust you? I don't know what is the market price of the gold. So you go to the market, sell the gold, get the money, then make the payment to me. Correct? But on the other side, can I say cash? Can I say cash need not be converted? It is accepted in the market. It is a mode of a money. It is a type of money which is accepted in the market. So now tell me, which of the two, in this example, which of the two has a higher liquidity feature? Which of the two has the higher liquidity feature? Can I say cash has a highest liquidity? You don't need to convert. It is money already. You don't need to convert. In fact, that is the reason they'll say cash is liquid. Cash is absolutely liquid. You don't need to convert. Cash is accepted directly in the market. Cash is absolutely liquid. But on the other side, let me give you one more example. Savings bank account and fixed deposit. Please tell me, savings bank account and fixed deposit, between both of them, which one do you think has more liquidity? Savings bank account and fixed deposit, between both of them, which one will have more liquidity? Savings bank account, right? Savings bank account, right? So savings bank account has more liquidity because in case of FD, in case of a fixed deposit, money is there. Nobody is contesting that. Money is there, but you need to close the FD, then money will be transferred, only then you are allowed to use money. But on the other side, savings bank account, today if you have, let's say, 100 crore rupees, become happy now, right? You are crore-patis. Imagine you have 100 crore rupees in your savings bank account. Can you withdraw the money at any given point of time? Even withdrawal is not required. Can you write a check at any point of time, give it to me or give it to somebody else in the market? Of course, yes. Can you use a debit card to make transactions based on the money that is there in your savings bank account? Of course, the answer is yes. So that is the reason liquidity. I hope you understand. Liquidity simply means it is a feature of an asset. How quickly you can convert the asset into money, that is called as liquidity of an asset. And in case of fiat money, can I say these are liquid always? Is it okay? These are liquid always, right? That is the reason fiat money has very high liquidity. Fiat money has very, very high liquidity. That is the feature here. Okay. And the fourth one is examples of fiat money, coins, as well as right, the notes, the currency notes as well as currency coins which are printed or minted by the government, right, are the examples of fiat money. Can we go forward now? Can we go forward? Right, again, some of you, I don't know why. What is the reason? I don't know. I'm discussing about money. You're talking about gold standard. I'll be discussing about this. You'll talk about industries. I'll be discussing about banking. You'll ask me question in agriculture sector. My dear, have patience, no? Am I running away? Is the class today, is it the last class? No. Will I discuss agriculture later? Yes. Will I discuss IMF later? Yes. Will I discuss exchange rate later? Yes. You should have patience. Right? I don't know why. And if I don't answer, right, again you'll keep on pasting the same question, and ultimately you will tell the faculty, are you blind? Can't you see my question? Are you deaf? Right? Can't you understand? Etc. etc. There is always a time and place. There is always a time and place for a question. If I'm discussing banking, ask me a question on banking, I'll address it. If you're asking a question on exchange rate, should I stop discuss banking and shift to exchange rate? Right? That doesn't make any sense. Anyways, right, even after telling this, again you'll keep on asking, right, the same things which are related to other chapters in this. Okay, done. Fiduciary money or bank money. The third one is, right, fiduciary money and right, or bank money. Fiduciary money or bank money. Let me start with an example. Imagine you have a showroom. You have a very, very big showroom, electronics showroom. I'll come to your showroom. Okay, I'll come to your showroom, and right, I'll basically purchase, let's say, one mobile phone, one laptop, and one tablet. Right, one mobile phone, one laptop, and one tablet. And the total price, let's say, comes out to be around 6 lakh rupees. Now, when I come to the billing, right, you are sitting in the billing counter. I'll come to the billing counter. You will bill it. I will take out my checkbook and start writing a check in your name. Please tell me, is there any compulsion on you to accept the payment in the check? Let me know. Is there any compulsion on you to accept the payment in the form of a check? Absolutely no compulsion. Absolutely no compulsion. There is no compulsion on you to accept the payment in the check. You can simply say, sir, sorry, I will not accept payment in the check. You have cash, pay me cash. You have a debit card, pay through debit card. You have a credit card, I'll accept that. You have UPI, although 6 lakh rupees, 5 lakh rupees not allowed, but anyways, let's assume I'll accept UPI payment. You want to make online transfer, I have my bank account details. But no, I will not accept payment through check. So now can I simply say, check is a type of money, mode of exchange. It is facilitating transaction. Check is a type of money. But whether to accept the check or not depends upon how much confidence you have on check. Correct? I'll repeat it again. Whether to accept this check payment or not depends upon how much confidence you have on the check. Meaning what? What if we are friends? We are well known colleagues. We are conducting lot of these transactions. So obviously, confidence that you will have on me will be very high. So even though I give a check, you will accept it. But if I'm a new person to you, you have never seen me in your life, I'm a new person, right? You will simply say, sir, I don't know who you are. I don't know who are you, right? So, and I don't know how much money is there in your bank account. So please do not pay me in the form of check. Give me cash. Give me, right, through online. Give me a debit card. Give me a credit card. So all of you okay with this? But the argument here is very simple. Check is an example of fiduciary money. Check is an example of fiduciary money. Fiduciary money simply is, right, the money where, right, the money where the issuer is guaranteeing the exchange of the fiduciary money with fiat money. Is it okay? I'll repeat it again. What is the fiduciary money or right, bank money? This is a type of money where the issuer of the money is guaranteeing exchange of this with fiat money. Meaning, let's say I'll give you a check of 5 lakh rupees. What will you do now? You will take the check, go to the bank. Will the bank not give you 5 lakh rupees? They will accept the check and the bank will give you 5 lakh rupees. So can I say fiduciary money is a type of money where the issuer is guaranteeing exchange of this with the fiat money. Right? That is basically the concept of fiduciary money. And please remember this, fiduciary money is not a legal tender. Fiduciary money is not a legal tender. It is not a legal tender. What do you mean by legal tender? Legal tender means any money that has been declared by the government and can be used for settling transactions. I'll repeat the statement here. What do you mean by legal tender? Any money that has been declared by the government, notified by the government for settlement of transactions in the market. That is called as legal tender. Can I say fiat money is a legal tender in India? Please do let me know. Fiat money is a legal tender in India, right? Whereas fiduciary money is not a legal tender. If fiduciary money was a legal tender, then I could have purchased anything from your shop, made a payment in the form of a check. But fiduciary money, no, it is not a legal tender. Okay? Usually is not declared as a legal tender by the government. The value of fiduciary money depends upon the confidence shown by the acceptor. The acceptor of this fiduciary money should have very high confidence on the issuer. Otherwise, they will not accept it. Examples of fiduciary money is demand draft, bank drafts, right, as well as bank checks. Okay, right? So fiduciary money, this is a third type, right? This is the third type. And the fourth type, commercial bank money. Commercial bank money, right? Commercial bank money. What is this commercial bank money? Commercial bank money simply refers to the money that is created. I repeat, that is created by banking sector. I'll repeat the statement. Commercial bank money is the money that is created by banking sector. Sir, what is this money created? The loans, the credit that is given by the banks is nothing but a commercial bank money. Let me give a very simple example. Have a look at the picture here. Do not by heart the picture. Please listen carefully. Have a look at the picture. Do not by heart it. Let's start. Imagine you have 100 rupee. You will take the 100 rupee, deposit the 100 rupee in a bank. Now, can I simply say the bank will use the 100 rupee to issue loans in the market? Correct or not? Please do let me know. The bank will take this money, issue loans in the market. Of course, yes. There is a term called as a reserves here. Tomorrow we will discuss this. But anyways, I'll tell you now. Right? There is a term called as reserve. What is the reserve? What do you think should be done by the RBI, that is Reserve Bank of India? Should RBI allow all the money that is collected by the banks to be given as a loan, or should RBI tell the banks, keep a certain money, do not use it for giving loans? What do you think is the correct way? I'm giving you two examples. One example, whatever deposit the banks have collected, use all of it. Use all of it to give loans. Second, some of the money that you have collected, keep it as a reserve. Keep it aside. Do not use this for giving loans. Don't you think the second one is a better approach? Why? Because if the bank will take the money, depositors' money, and use all the money to give loans, what if the borrower will not repay? Think of it. What if the borrower will not repay? That is very risky. And moreover, if all of you keep deposits in a bank and all of this money is given in the form of loan, one of you will go to the bank to withdraw money. Do you think bank will have money at that point of time? Right? So I hope you understand the logic behind having reserves. Right? So I hope you understand why reserves are mandatory in India. Tomorrow we will discuss what kind of reserves are supposed to be maintained by the bank. We'll discuss that tomorrow. So reserves are mandatory. Banks will have to maintain reserves. Let's assume reserve is 10%. Let's assume reserve is 10%, which means once you deposit 100 rupee in a bank, bank will keep aside 10 rupee and issue 90 rupee in the form of loan to me. The bank will issue 90 rupee loan to me now. Now have a look at this. What will I do with 90 rupees? I will purchase, let's say, raw materials or a machine and I'll pay 90 rupees to another company. Let's say I will pay it to company B. Now company B has received 90 rupees. They will take the 90 rupees, deposit that in a bank. Now please tell me, after step number 1 and step number 2, can I say bank will show that they have deposits of 190 rupees? Please do let me know. After step number 1 and step number 2, can I say banks are showing that they have a total deposits of 190 rupees. Anybody has a difficulty in this? Banks are giving you a data. One bank says I have a deposit of 100. Another bank says I have a deposit of 90 rupees. So can I say total deposits in the banking sector is now 180. Now please tell me, do you think we have printed 190 rupees in this example? Please think of it. Do you think we have printed 190 rupees? No, we have printed only 100 rupees. But because of circulation in the economy, because of credit creation, because of loan creation, can I say overall money supply in the economy will be more than what is actually printed by RBI. Does it make sense or not? Please do let me know. I'll repeat it again. Right? RBI has printed only 100 rupees. Right? In this example, RBI has printed only 100. But one bank says they have 100 rupee deposit. Another bank says they have 90 rupee deposit. How is that possible? That is possible because of loans. That is possible because of creation of credit. Right? This is the money that I'm talking about when I say commercial bank money. The banks will create loans. The banks are not printing money. I'll repeat it. Banks are not printing money. Banks are merely creating loans, creating credit in the market. That money which is created by the banks is called as commercial bank money. All of you okay with this? That is called as commercial bank money. Can I go forward now? This money is created by the banks under fractional reserve system. What do you mean by fractional reserve system? If you followed the discussion, I said, whenever a bank will collect a deposit, part of the deposit, fraction of the deposit, they will have to maintain in the form of reserve. And remaining amount, they can use it for lending activity. So this process of keeping a part of the deposit, fraction of the deposit as a reserve is called as fractional reserve system. FRS, fractional reserve system. In case of India, banks are supposed to maintain reserves. RBI says you will have to maintain reserves. Why so? What kind of reserves? Right? Is it good? Is it having a negative impact, etc.? We'll discuss that tomorrow when I take up cash reserve ratio, statutory liquidity ratio, etc. You will understand later. Please don't worry. Right? So the money that is created by the banks under the reserve system, is called as a the commercial bank money. It is a debt. Debt is nothing but loan credit that is generated by the banks, which can be exchanged for money. That is, let's say 90 rupee credit is created, which means you can take 90 rupee, right, loan from a bank, and which can be exchanged for money. Done. So these are the four types of money. Can we go forward? These are the four types of money. Anybody has any issue regarding any of the types of money? Why did governments around the world get rid of gold standards for money? My dear, in the context of gold, please understand, earlier what used to happen was, again, we would have discussed this under IMF, but anyways, because you're asking, earlier what used to happen, imagine I will print 10 rupee note. Imagine I will print 10 rupee note. To provide security for this, I would keep 10 rupees worth of gold. Is it okay? I'll repeat it again. Earlier, if I printed 10 rupee note to issue in the market, to provide security for this, I will also keep 10 rupee gold with myself. That was done by the central banks earlier. But don't you think the amount of gold that is available is very limited? Please think of it. Right? Don't you think amount of gold that is available is very limited? So if you keep on printing thousands and lakhs of crores of money, can you keep on providing security for that in the form of gold? Not possible. It's practically impossible. Right? Because let's say you have a money which is in the circulation, which is, let's say, 30 lakh crore rupees. Can you keep 30 lakh crore rupees worth of gold as a reserve? Not possible. That is the precise reason we have discontinued the system. RBI has certain reserves. RBI follows a system called as a minimum reserve system, where certain amount of gold and certain amount of cash is kept with RBI, but that is generally around 200 crore rupees. Right? We have stopped practicing where gold is kept in the banks for printing money. That is discontinued. Okay. Commercial money, I'll repeat it again. Banks are creating loans. Do you understand when I say creating? Banks are not printing money. Banks are creating loans. They will collect 100 rupee deposit. They will keep, let's say, 10 rupee as reserve. Remaining 90 rupees, they will give it as a loan. That 90 rupee will go back into a bank. That bank will keep certain reserves aside, again issue loans in the market. So banks are not printing money, but they are creating loans. This process of creating loans is called as commercial bank money. Okay. What are drafts? Earlier, there was a concept called as a demand draft. Right? Earlier, there was a concept of a demand draft. That is, imagine instead of paying money, you will go to a bank, you will pay money, and the bank would issue a paper like this, right? The instrument, demand draft. Now I will take it, pay it. Instead of paying money, I will pay it. The acceptor will go to the bank, deposit the demand draft, get the money. Earlier, demand drafts were very famous, but today we have discontinued. We do not use demand drafts majorly now. What is check bounce? Unnecessary things. What do you want? What is check bounce? I will issue a check worth 5 lakh rupees. You will deposit. There is no 5 lakh rupees in my account. Right? That is called as check bounce. Okay. Okay. Can we go forward now? What is legal tender? I'll repeat it again. Legal tender means any money that has been notified by the government, which is used for settlement of transactions. That is called as legal tender. Okay. Now let me go forward. Banking structure. What is a banking structure in India? Please have a look at it. Don't start asking questions. What is cooperative bank? What is a payment bank? We will discuss that. Have patience. Absolutely no patience with you people. Right, sir? What is urban bank? What is rural bank? Tell me right now. I'm asking right now. Right. So RBI is the regulator of banking sector. RBI is the regulator. RBI will regulate all the commercial banks. RBI will regulate all the commercial banks. Now, what do you mean by commercial banks? Please remember this. commercial banks are those banks which are involved generally in two activities. I repeat, commercial banks are those banks which are involved generally in two activities. What are the two activities? One, collect deposits and give loans. And because remember this, when they will collect a deposit, let's say they will give you 4% interest rate, they will give loans and they will collect a 7% interest rate. So in this example, can I say the bank is earning money by charging more interest on their lending activity? Correct or not? Please do let me know. I'll repeat it again. Right? Bank will collect a deposit from you, give you 4% interest rate. Then the bank will give the loan to me and collect 7% interest from me. So don't you think bank is earning money by collecting and lending? Earning is 3%. That 3% is called as interest margin. That 3% is called as interest margin. So commercial banks, look at the name, commercial banks. Commercial banks are involved in this kind of activity. Commercial banks are involved in this kind of activity. That is, they will collect a deposit, they will give loans. Now, commercial banks can be divided into two types. One is a scheduled commercial bank. Second one is non-scheduled commercial banks. Now, what is the basic idea of a scheduled as well as non-scheduled? If you are a bank who is registered, I repeat, if you are a bank who is registered under RBI Act, if you are a bank who is registered under RBI Act of 1934, there is an act, RBI Act of 1934, and under RBI Act, there is a Schedule 2. There is a Schedule 2. So if you are a bank, if you are registered under Schedule 2 of RBI Act of 1934, you are called as Scheduled Commercial Bank. And if you are a bank, you are a bank, commercial bank, but you are not registered under the Schedule 2 of RBI Act, you are called as non-scheduled commercial banks. So difference is simple, registered, non-registered under RBI Act. And because you are registered under RBI Act, you can always borrow from RBI Act. There are a lot of conditions regarding reserves that are imposed by RBI on you, right? So regulations will differ. Regulations will differ. And before you start asking me, sir, any examples of non-scheduled commercial banks in India? I've given some of the examples. You don't have to remember any of them. It's of no use for you. Many of the students, even though there is no use, they'll keep on asking me, give me example, give me example. I've written examples. I've given 10 examples of non-scheduled commercial banks. Don't by heart it, waste of your time. And now if you look at the picture, please tell me, in Indian economy, who do you think will play a major role? Commercial banks which are scheduled or non-scheduled commercial banks? Think of it. Right? Who do you think plays a major role in Indian economy? Scheduled commercial banks or non-scheduled commercial banks? Fraction of the total banking sector is non-scheduled. Fraction, just a fraction. Most of banking activity is done by scheduled commercial banks. Most of it is done by scheduled commercial banks. And that is the reason if you're reading newspapers, generally you will not come across non-scheduled commercial bank activity in India. Let me know. Do you come across, when you have read newspapers, assuming you're reading newspapers, do you come across, right, a non-scheduled commercial banking activity or scheduled commercial banking activity in the coverage? RBI tells scheduled commercial banks, do this. RBI, right, has imposed this kind of a guideline on, right, scheduled commercial bank. SBI, loans are this much. The banking sector, scheduled banks, NPAs are this much. You will come across scheduled commercial banks. Okay, you will come across scheduled commercial banks. Now, this is basically the division. This is basically a division. Don't worry about cooperative banks, small finance bank, payment bank, regional rural bank. We'll discuss all of them separately. We'll discuss all of them separately one by one. Okay, done. Now, let's start with Reserve Bank of India. Let's start with Reserve Bank of India. What are important points? Historical important points. Point number one, there was a committee which was set up by Government of India before independence. There was a committee which was set up by Government of India, Hilton Young Commission. Based on the recommendations of Hilton Young Commission, The government of India in 1934 passed RBI Act of 1934, and from the 1st of April 1935, RBI was established. 1st of April 1935, RBI was established. Right, point number one. Point number two, initially RBI was privately owned. Right, there were shareholders who were owning RBI. But 1949, after independence, 1949, Government of India nationalized RBI, which means from privately owned bank, RBI became government owned bank. So today, if you ask me, sir, who owns RBI? It is owned by Government of India. Initially, for a couple of years, right, that is from 1935 to 1937, RBI was having the headquarters in Calcutta. But 1937, the headquarters was shifted to Mumbai, and since then, the headquarters of RBI is present in Mumbai itself. It is present in Mumbai itself. Even today, where is the HQ of RBI? It is there in Mumbai from 1937. Now, right, what are the important sections under RBI Act of 1934? I would recommend try to remember some of the sections. These are there in the current affairs. Try to remember some of the sections. For example, please do let me know, recently was there a discussion regarding 2000 rupee note in India? Think of it and do let me know. Recently, right, was there a discussion regarding 2000 rupee note in India? So suddenly UPSC can ask you, under which of the sections of RBI Act, RBI has the power to print currency notes? Suddenly UPSC can ask you, right? That don't be fooled by that. There are sections under RBI Act. For example, please have a look at it. Section 22 of RBI Act says RBI has the exclusive right to print currency notes in India. RBI has exclusive rights to print currency notes. Who will finalize or who will make a design for currency notes in India? RBI. Who will finalize? RBI will send it to the Ministry of Finance. Both of them will finalize, okay, this is the currency note design. But who will print the currency notes in India? RBI. RBI will print the currency notes in India. So that's the reason suddenly, right, UPC can ask you this. Okay, can we go forward? Okay, can we go forward? Section 3, establishment and incorporation of Reserve Bank of India. Establishment and incorporation of RBI. Section 4 talks about how much capital should be there with the RBI. Capital means money. Section 7, the government will consult and give instruction to the governor, and governor of RBI has to implement this policy. Right? So under Section 7, if Government of India, after consulting RBI, will issue an order to RBI, RBI has to follow that. There is no option, RBI has to follow that. Section 8, composition of Central Board of Directors. What is a Central Board of Directors? Please understand. Central Board of Directors is the group which will take decisions for Reserve Bank of India. The decision-making authority within RBI is with the Central Board of Directors. The Central Board of Directors, the composition as per RBI Act is 21 people. CBD as per RBI Act should have 21 people. The 21 people or 21 right members within the Central Board of Directors are divided like this. One is the RBI governor. 4 members are deputy governors of RBI. 10 members are experts appointed by Government of India. After that, there are 4 local boards. Local board means offices, right? The metro cities, earlier important cities during the British government. So there are 4 local boards. From all of these 4 local boards, there is one member who is representing in the Central Board of Directors. So 4 members from 4 local boards. Finance Secretary, whoever is the one, they will be part of CBD. Economic Affairs Secretary, whoever is, right, will become part of CBD. So 21 members are there in the Central Board of Directors, and this is 21 members. Okay, 21 members will be taking decisions for Reserve Bank of India. Apart from this, we also have RBI offices in many cities in India. For example, Hyderabad, there is an RBI office. Right, Jaipur, there is an RBI office. In Jammu, there is an RBI office. In Bangalore, there is an RBI office. So this is basically the structure, and the CBD recommendation or the composition of CBD comes under Section 8 of RBI Act of 1934. And please understand this. All these appointments, if you talk about governor, deputy governor, experts, a finance secretary, etc., who will appoint all of them? It is the government. It is the government who will appoint all of these, right? Who will appoint all of these? Of course, you can simply say, but sir, local boards. Please understand, RBI is is owned by Government of India. So the appointments have to go through Government of India itself. Okay, right? So this is Central Board of Directors under Section 8. Section 17, it talks about what kind of business can be done by RBI. What kind of business can be done by RBI? Because please understand, tell me, have you come across any newspaper article where RBI will invest in stock market? Let me see. Any article where RBI has invested in real estate? It's not done, right? It's not done by RBI. Why? Where can RBI invest money? There are conditions on it. And under Section 17, these conditions are actually mentioned. Under Section 17, these conditions are mentioned. And where can RBI invest money? It is allowed to invest money in gold. It is allowed to invest money in government bonds, either domestic government bonds or external government bonds. Beyond that, generally, RBI is not going to invest anywhere in the market. Okay, Section 21, RBI must conduct banking affairs for the central government and manage public debt. Tomorrow we will discuss how does RBI manage a public debt. What do you mean by manage affairs of the central government? Tomorrow we'll discuss regarding that. Done? Okay, so let me take a pause now. Let me stop the discussion here. Let's solve the questions. Let's solve the questions. Before that, are there any questions? Is there any body to appoint these members? Different groups are there. You don't worry about it. Sir, FM will decide the currency design on its own or by the recommendation of the PM. Generally, we will say finance ministry. Finance ministry will take a decision. What is the role of India government mint? I'll discuss that tomorrow. Okay. Can RBI be privatized? If Government of India wants, they can privatize it, but they will not do it. This classification is doubtful. The scheduled and unscheduled bank should be below RBI, and common scheduled, I don't know what term you have used, should be under scheduled banks. No, this is the structure. This is a simplified structure. In fact, please understand this. This is a simplified structure, right? Again, you can check it online. Right? Check it online. RBI will regulate all the scheduled commercial banks. RBI will regulate non-scheduled commercial banks. Again, listen to me carefully. RBI will regulate non-scheduled commercial banks, and these are coming under scheduled banks. But apart from this, are there any other banks in India which will come under regulation of RBI? Of course, yes. Have you heard of Exim Bank? Exim Bank is Export Import Bank. Exim Bank is Export Import Bank. It is an all India financial institution. Have you heard of NABARD? Right, NABARD is also a bank, right? But again, please understand, NABARD is not a commercial bank like SBI. NABARD is more involved in, let's say, agriculture sector. NABARD is more involved in the cooperative banking sector. So even all India financial institutions such as Exim, NABARD, all of them will come under regulation of RBI. All of them will come under regulation of RBI. Okay, done. RBI will send the designs of currency to whom for approval? Finance Ministry. Finance Ministry. Okay. Okay, let's solve questions now. Let's solve questions. After that, we can stop the discussion. This one yesterday we have solved. Yesterday we have solved. Right. So let's start with the second question directly. Yesterday we have solved this. Let's start. Okay, 70% have answered correctly. Let's start. What is or are the most likely advantages of implementing GST? It will replace multiple taxes collected by multiple authorities and will thus create a single market in India, national market or single market. First one is correct. It will drastically reduce the current account deficit. I have not discussed current account. I know. Again, when I say current account, I'm talking about balance of payment. We'll discuss that later. Current account deficit simply means, understand this carefully, current account is part of a balance of payment. Current account generally consists of many components, including imports as well as exports. If the revenue side means how much money we receive under the current account is more than how much money we spend under the current account in balance of payment, it is called as current account surplus. If the money that we spend under the current account is more than the money that we receive under the current account, that is called as a current account deficit. If you have not understood it, don't worry. We'll discuss this separately when I take a balance of payment. But the answer to this question, it will drastically reduce the current account deficit of India. It is no. It will not help in reducing the current account deficit. But more importantly, please understand the technical term is drastically. Drastically means quickly. Please tell me, can anything happen very quickly in the Indian economy? For that matter, even global market. So the key term here will be quickly or drastically, right? So no, drastically it will not reduce current account deficit. It will enormously increase the growth and size of Indian economy, and it will help India to overtake China. My dear, China's GDP is 6 times compared to India's GDP. Right? China's GDP is 6 times compared to India's GDP. So you think just by implementing GST, India's GDP will expand to an extent where it will overtake China? Absolutely no. These are all extreme statements. Extreme statements. Extreme statements are seldom correct. Right? These are most of the times wrong. So 1 and 2 are wrong. Right option for the question will be option A. Option A is the right one. Next one. Okay, 50% have answered correctly. A very conceptual question. This is not factual, conceptual question. And some of you are saying, sir, can we use elimination method? My dear, I am not using elimination method in solving these questions for a very simple reason. This year, UPSC has basically stopped giving you elimination based questions. That is the reason I'm not using elimination. I know in many of these questions, I can use elimination. I'm not doing it. Precisely the reason is UPSC may not give you any elimination question in the prelims. Let's start. A higher tax revenue can be collected by imposing higher tax on commodities which have highly inelastic demand. Correct? Highly inelastic demand means what? Price will increase, demand will not fall down by a large percentage. Demand will not come down by a large percentage. Highly inelastic. Right? It could be a change by 0.001%. Demand can change by a very small percentage. So please tell me, if you impose a higher tax and the product has a highly inelastic demand, don't you think you'll be able to collect more tax revenues? Yes. Second one, which have highly elastic demand. You change the price by imposing higher taxes, market price will increase, the demand will suddenly fall down by large percentage. So no, we will not be able to collect more taxes. Third one, habit forming, right? Example, alcohol, tobacco products. These are habit forming products. So of course, yes, you might impose a higher tax. People have the habit of consuming it. They will consume. The government will collect more taxes. So 1 and 3 are correct. Right option for the question will be option B, 1 and 3. A descriptive question, I think around 2 or 3 questions are there descriptive. Let's start. Discuss the rationale for introducing GST in India. Bring out critically the reasons for delay in the rollout of its regime. We introduced GST from the 1st of July 2017. But many years before 2017, there are a lot of discussion, deliberations as to how do we implement GST, what should be the form of GST. So the question is, why was there a delay in the implementation of GST? So first part of the question, discuss the reasons why we are implementing GST. That should be very straightforward for you. We want to address a cascading effect. We want to help logistics sector by reducing cost of transportation. Multiple states, multiple tax rates, there was a complex tax structure. We want to simplify it. We want to promote ease of doing business. We want to promote manufacturing activity in India. So these are some of the reasons for introduction of GST. Second part of the question, give the reasons why there was a delay in the rollout of GST. These are some of the reasons. Let's go one by one. And if you ask me, sir, what should be the structure of answer? Introduction, simply write GST is one of the most important taxation reforms since 1991. That's it. Don't waste your words. Come to the reasons for the introduction of GST. Third part, why there was a delay in implementation of GST. Why was there a delay? First one, there was a lot of deliberation regarding what should be the GST structure. What should be the GST structure? Should we subsume these taxes from the central government? Should we subsume these taxes, etc., etc.? A lot of deliberation happened. Second, there was also a lot of deliberations regarding compensation. How much compensation should be paid? 100% should be paid or 50% should be paid? For what duration should it be paid? How compensation should be calculated? That was the second. Third one, once we decided to have GST, now there was a friction between the center and state as to what goods and services should be brought under GST. What goods and services should be brought under GST? There was a lot of deliberation regarding that. Fourth one, how the revenue distribution is going to take place. How the revenue distribution. So these are some of the reasons why it took a very long time period in India to discuss and then implement goods and services tax. Right? So you have addressed introduction as well as the main body. Okay. And again, some of you will ask, sir, what is the way forward? My dear, is there a question regarding problem of GST? Are they asking you to give recommendations? Nothing. So don't simply give recommendations way forward where that is not required. Enumerate the indirect taxes which have been subsumed in the GST. Also comment on the revenue implications of GST introduced in India since July 2017. Again, introduction, you can write a single line regarding GST. Single line. Don't write completely about GST. What are the reasons, why it was introduced, what was the problem earlier under excise duty, etc., etc. Don't waste your words. Right? Write a single line intro about GST. Then what kind of taxes have been subsumed under GST at the central level, state level, 2 or 3 under each of the types, you write it. Come to the other part. That is important, more important, because first part is factual. Second part of the question is conceptual. What are the revenue implications of GST? What are the revenue implications of GST? First one, can I say the states were concerned about loss of revenues when they will give away the taxation powers under GST. That was one concern. Second concern was compensation period has been given for 5 years. Now there is a concern why it is not getting extended. It is also revenue implication. Why it is not being extended beyond 5 years? Again, that is second concern. Third concern regarding revenue implications is more and more taxpayers, that is the companies, the sellers, etc., they have been brought under the ambit of GST, which has led to more formalization, more revenue collection. Fourth one, the tax buoyancy. The tax buoyancy, since the implementation of GST has been more than one. Before GST, it was below one. The amount of taxes which have been collected under GST post 1st July 2017, annually they have been increasing compared to pre-GST era. And the fifth or the sixth revenue implication that you can write in this paper, or let's say in this kind of question based on the current affairs data, in recent times, the monthly GST revenue collections have crossed more than 1.6 lakh crore rupees. So these are the revenue implications which are associated with the concept of GST. Okay, done. Right, so these are the descriptive questions which have been asked in the last couple of years regarding goods and services tax. Now let me stop the discussion today. If there are any questions, please do let me know. Otherwise, we'll wind up the discussion. But countervailing duty has not been subsumed under GST. So why is it written? It has subsumed under GST. Where it is written? Where it is written? Countervailing duty. Additional customs duty, commonly known as countervailing duty. Some of the types of countervailing duties have been brought under. Okay, let me check here whether I've written it or not. Because please understand, whenever you talk about imports, the imports will basically come under IGST, integrated GST. Imports will come under GST, that is integrated GST. Okay, GST at the center level. Additional customs duties, countervailing duties, some of them have been brought under. It is there in the slide also. Okay. Okay, any other questions? Any other questions? Please do let me know. Otherwise, I'll stop the discussion. Any other questions? Nobody wants to ask question. Great then. What is FRS? Fractional Reserve System. I'll repeat it. Part of the deposits which are collected by the bank. Part of the deposits which are collected by the banks, they will have to keep it in the form of reserves. Because part of it is kept, can I say, fraction of the deposits are maintained in reserves. Remaining part will be used for lending activity. So because we are using part of the deposits as reserves, this is called as fractional reserve system. Will equalization levy not come under taxation? Again, it's a current affairs topic. Okay, we'll discuss maybe when I'm discussing other chapters, international trade, etc. I'll tell you what is the idea of equalization levy. It is basically some of the service providers in India. Equalization levy is some of the service providers are providing services in India. On the services that they are providing, government is imposing a tax that is called as equalization levy. Okay. Anti-profiting simply means the government is concerned whenever the government will reduce the tax rate, complete reduction in the tax rate is not given as a benefit to customer. To address that, government had set up a committee, had set up an authority, National Anti-Profiting Authority, where National Anti-Profiting Authority would simply take up the cases suo moto or receive the complaints of the customer, investigate and impose penalties if they find the sellers are at fault. Okay. Does SLR come under FRS? Are Baba. Right? SLR, CRR, we'll discuss that tomorrow. Don't worry. Fractional reserve system is referring to a system. What kind of reserves are there? We'll discuss that tomorrow. Okay. How much minimum time I have to study after the class? My dear, there is no universal answer to that. There is absolutely no universal answer to that. Do I know how attentive you are in reading? Do I know what is your recollection capacity? I'll tell you the data. I'll tell you. Usually the experts say minimum 6 hours. Again, I hope you understand. Minimum 6 hours a day. Now, whether you are able to read it at a much faster way, comprehend it at a much better way, it will depend from one student to another student. There is no universal answer to that. Now in India, how many scheduled banks are there? Right? If you talk about public sector banks, there are around 10 to 11 public sector banks which are scheduled. Okay. Sir, is government increasing the GST compensation period further? No, government has not increased the GST compensation period anymore. After 2022, they have not increased. Sir, do foreign countries export duties harm our Indian exports? Foreign countries export duties. It will be imported duties for a foreign country. I will export to USA. USA will impose imported duties. That will harm us. Okay. Okay, done. So let me stop the discussion today here. Tomorrow we will continue. Tomorrow we'll continue with Reserve Bank of India. Right, we're supposed to continue the discussion. Tomorrow we'll continue the discussion with the Reserve Bank of India. Okay, so let me stop the discussion. I will continue tomorrow. So take care. See you tomorrow. Have a great day.